My name is Marina. I am the trader chick, and that is me with one of my favorite little humans right there. And I have a really cool question for you guys. Okay, this is going to be really fun. Who here enjoys Cirque du Soleil? Who here likes Cirque du Soleil? Because I have a confession to make. I absolutely love Cirque du Soleil. It's one of my absolute favorite things. I've been very bummed that, with the COVID, we haven't had any time at all, any chance of seeing Cirque du Soleil in life, but it is super, super, super cool. Yeah, love it, right? So the last time I actually went was like right before COVID, right before the pandemic, they came here and I took my son and I started to recognize some really extraordinary things. And this is kind of what I want to talk to you guys about, right? Cirque du Soleil. Like we watch these guys and we are completely in awe of them, right? I mean, if you guys aren't in awe of them, you're fooling yourselves, right? Because what they're doing is pretty much extraordinary, right? However, when you take a closer look, they are literally ordinary humans that are doing extraordinary things, right? They are people just like you and I that have committed to doing extraordinary things, right? And I started to really focus on them and actually became a little bit obsessed. When I came home, I was doing all this research on them. What does it take to go from an ordinary person to becoming extraordinary? And it's also the same, pretty much same thing applies to becoming a successful day trader. And everybody here that is joining today can pretty much, say that we all want to be successful day traders, right? Like that is the goal. So I started to really focus and understand because I had to go through a whole lot of myself to get to where I am today, which is consistently profitable day trading, right? Where day trading is literally my livelihood, right? And I started to see the correlation between Cirque du Soleil. It's so easy to see Cirque du Soleil because we see them and we're like, wow, they are absolutely incredible, right? So it's easy to really see the exaggerated part. But what does it really take to get there? First of all, commitment, their commitment. Why is it that when we watch Cirque du Soleil performers, we are totally cool with the fact that they have been committed to their training for years and years to become masters, right? Like they have probably put in 10 to 15 years before we are actually seeing them to see at the mastery that they've gotten, right? And we're okay with that. Their intense focus. Have you guys ever watched Cirque du Soleil? First of all, if you haven't, please go on YouTube. You could watch. It's not the same as being in person, obviously, but you can still see the magic that is going on. But just focus on them. They are so focused and they are so right there in that moment because if they're going to multitask, if they're going to be doing so many other things, they could probably fall to their death, right? So that is something that they have completely mastered as well, is that focus and discipline. The thing is, we hear these words discipline. Oh, you have such discipline being thrown out there so often. The reality of discipline isn't the actual act of discipline because we can't really quantify what discipline really is, right? But it's the movements, the actions that we take that are permits us to be disciplined. And what are they doing? They show up every single day, right? They show up to their training. They show up to their performances, regardless if they're feeling crappy, regardless if their mind is not in the right place. They get back to that right place, right? But the other thing is they do not waver from what they have been trained. That's strategy, right? They have techniques that they are following, and that is what discipline is, right? It's learning that strategy and sticking to it without wavering from it for even 1 minute. The other thing is they have total trust, first of all, in themselves because they put in the years, right? They know that they know what to do. Even if sometimes it's going to be a little bit off, they know that the majority of times it is going to be right. They completely trust their partners, right? Like these acrobats that are being thrown through the air trust that their partner is going to be there to capture them. Their routines, their equipment, okay? And confidence, right? The reason they have such confidence that without any doubt is because of the time they have put in. Okay? Now, right here, this is it. Do you really believe this woman does not have trust, first of all, in her partners, and secondly, in the equipment? okay? For sure. So, what do the Cirque du Soleil performers, directors, choreographers, and us day traders have in common? Exactly the same what I just talked about, okay? It's way more than you think, right? So first of all, I want to talk about that commitment, okay? We all say we want to be day traders, but very, very, very few people actually commit, right? They may be throwing a little bit of money or a lot of money, unfortunately, but they don't commit to actually sitting there, studying the charts, understanding what the charts are telling us, really understanding that strategy. I actually want to go back really quickly. Oops, hang on a second. Why is this? Right, their commitment, their the focus. I don't know about you guys, but until I recognize that I have to be so focused right in that moment that I realize that me watching television, me talking on the phone, me talking to my husband, that is not going to get me any successful trades. The discipline. A lot of people are like, "Oh my God, Marina, you're so disciplined," but it's not about the discipline. I have found a strategy that I totally trust, that I totally believe in, and I stick to it. When I see some things that are going on in the market, it's literally like a red light to me, right? Like I'm not going to question it. Well, maybe it's going to work. No, it's a red light. When we see a red light when we're driving, we stop. Do you want to call yourself disciplined? Sure, if you want to, but we all know that if we, you know, don't stop at that stoplight, first of all, we could get hit by another car, we could hit a person, we could get pulled over. There's all these other things, right? So we don't. So it's the same thing with day trading. The trust. I cannot even tell you guys the amount of people that don't have any trust in they don't not trust in their equipment, but they don't understand how to even work their charts and are already putting real money into the market through these charts that they don't even know how to exit properly. It amazes me. These people, do you really think these Cirque du Soleil performers are going to hop on here? She's going to hop on today, right now, for the first time, 30 feet above air, no safety net, and start doing this? Absolutely not, right? She has put time and effort and probably started at the bottom, which means being in simulation mode and demo mode until she really understood the equipment and the routine and the strategy. So that is what brings us to that confidence, right? Because I get so many people are like, I'm so not confident, I don't really trust, yet they're in the live market. Would you tell your kid who barely has any trust or confidence in knowing how to drive a car and tell them to just go and take it on the Autobahn where there's no speed limit, driving like, that people are driving like crazies? But people don't realize that it's the same thing with the stock, with the market. When you put your money into the live market, it's like literally being in on the Autobahn, surrounded by tons of fast drivers, pro drivers, right? So what do we have in common with Cirque du Soleil people? What is it that we hear that these 5% day traders are successful? It's exactly what I just said. They are committed. They show up every single day. They practice. They understand their equipment. They know everything about their equipment before putting the money into the live market. They fully trust their routine. They fully trust their strategy. And if they don't, they commit to understanding and learning and back testing. Okay? So this is super, super important. The people that 95% that we hear that are failing, they lack what the Cirque du Soleil people do. So why is it that when we look at the Cirque du Soleil people, we are totally cool with them doing what they're doing, but yet we do not realize that it's the same commitment that makes a successful day trader? We hear that you can make millions, and you can, but you really think it's going to happen if you put zero effort? Absolutely not, right? So, what is it that we can do differently from that 95%? And that is really, really what I want to talk about today. Obviously, we cannot talk about everything, but we can focus on certain things that I guarantee will take you guys to that next level. So, today's presentation, I want to talk about trends. Trends is pretty much the foundation. It's like the tightropes of everything that we do in trading, right? We have to understand the trades, so trends, to understand the good trends, to understand and totally stay away from the sideways trend, and understanding how to use the trends for the high probability trade setups. Now, before I go into the meat of this presentation, I have the entire presentation, everything I'm going to go over in a free worksheet for you. You can get it right here, right now, makingofadaytrader.com. makingofadaytrader.com. Everything that I'm going to go over right now, you can get it with this free worksheet, makingofadaytrader.com, and you could go along with it. And Anna said in the beginning that she's going to be sending the replays, so you could use the replays with the worksheet. And it's literally, the worksheet is literally what I pretty much use for my own trading. So I really recommend you guys get it, okay? So again, makingofadaytrader.com, totally free. All right, before we go in to the presentation, I want to just do a really quick intro, because people forget one really important thing. We day traders, we are people, right? We are multi-passionate, multi-interest, and I don't want us to forget that. And I want to be able to show you that what your life experience brings to you can make you a better trader. So I am Marina, the Trader Chick. I actually am an expat. I live in Antigua, Guatemala. I am talking to you guys from Antigua, Guatemala. Right now, this is my family. My husband is Guatemalan. I actually speak 3 languages. I was a refugee from the Soviet Union when I was really young. We arrived to the United States. So Russian is my mother tongue, and actually me and Anna talk Russian, and she helps me with my rusty Russian sometimes. But English is my main language because I was raised in the US pretty much my entire life. I went through the school system and everything there. However, I have been living in Central America for over 20 years as an expat. We first lived in Costa Rica, and now we're living in Guatemala. So I learned Spanish in my later years. And the main reason why I bring this up is when you learn a new language late in your later years. I was in my late 20s when I learned Spanish. There's a whole process that happens, right? I don't know if any of you guys have learned a language in your later years, but it's, everything that you want to say, you first have to go through a process. You have to translate it, and then you have to say it to the person in front of you. Then whatever that person says to you, you have to kind of digest it, process it, translate it, and it's a process, right? And the person has to be super patient, and it really helps when they're really helpful and supportive. But then what happens when you are committed and you're practicing? One day you wake up and you just speak the language. You just speak it. So one day I woke up and I just spoke Spanish. So there was no more translating going on. There was no more process. Obviously, I'm still not 100% fluent, but I could certainly hold my own in any conversation, in any situation, right? And that's the cool thing about it. And that's one thing I recognized when I started to really commit myself to learning day trading and understanding the charts, because it's all about the charts with day trading, that it's a language. It's an actual language. And when you start to listen to it and read it and understand it, your trading will completely change. And I think I got that because I am trilingual, and I recognize that. Another thing is, before I became a day trader, I was a fitness instructor. I was actually one of the very first fitness instructors in Manhattan to teach spinning and to teach Pilates, other than all the other things that I was teaching. So I was a fitness instructor, and I'm also a travel writer. I have a really fun site that I still write and use all the time, even though we haven't been able to travel as much. We normally travel 3 to 4 months per year, and you can still find me here on my site. So I just wanted to let you know that I am a lot more than just a day trader. You do not need to be a financial background or economics background, math, none of that, right? You can be wherever you come from, and that's the beauty of day trading. Again, everything I'm going to be going over with you guys right here, you can get it on makingofadaytrader.com. Makingofadaytrader.com. So I recommend you guys get it totally free. Makingofadaytrader.com. Okay, so every performer starts with learning the basics. Everyone, right? Every single one of the Cirque du Soleil people that we've seen doing these crazy, extraordinary things, they all started from the very, very beginning, right? That is how you grow your confidence and your trust. They mastered the basics. And one thing with day trading, especially when you're learning, people very rarely talk about the basics, right? Like you kind of jump in, and I always give this analogy that it's like jumping in if you want to learn how to play a musical instrument, and instead of just showing up for the conservatory and learning the basics, you get thrown into the symphonic pit and expected to just keep up with the rest of the traders. And this is, I would say, 99.9% of the trading rooms and these alerts, because they don't teach you any of that, expect you to go and follow their trades. But if you don't have the basics, if you don't know how you're doing it, you're going to fall off that high wire. You're going to fall off because you have no idea how to make the steps properly. So this is super, super important, right? And that is actually what the Cirque du Soleil people do. They start with the basics. This guy cannot be doing these crazy twists 60 feet in the air if he doesn't know how to do it touching the ground, right? And that's what I want to talk to you guys about today, the basics. We're going to be talking about 4 strategies, all different increments of trends. And you need to understand trends to really, really, really be able to really understand how day trading works, right? If you don't understand that, you're going to have a lot of hard time and a lot of losses. So if you ever think of a tightrope walker, they start with one small step leading to the other crazy ones, and they usually do it touching the ground, right? This is not going to happen right away. And you can literally imagine this as people putting money into the market. I mean, hundreds of thousands of dollars without even understanding how to walk on that tightrope on the ground. So let's get ready to jump on that tightrope and dominate it. We're going to start with market movement and momentums. Okay, let me first get a drink of water. Okay, so we all understand and we all logistically know that there are 3 trends, right? There are 3 trends. We have the upward trend, we have the downward trend, and we have the sideways trend. 90% of your earnings for the day and probably even more money gets lost in the sideways trend. Why? What is the sideways trend? It is the exhaustion pattern. It is the chop. It's the indecision area. It's the channel, the sideways movement, whatever you want to call it. It's still all the same. It's a place where it is unknown. We do not know what's going on, and we do not want to be entering and putting our hard-earned money into a place where it is uncertain, right? Would you do that with any other way? Chances are not, but yet somehow we feel we need to do that. So let me just really go over again, rudimentary stuff. What is a upward trend? It's when each pivot is higher than the other. What is it that we do when we are in an upward trend? We are going along. We are buying. We are entering at a smaller price range, exiting at a higher price range. What is a downward trend? Literally the opposite. It's when each pivot is lower than the other pivot, right? And what are we doing? We are shorting the market. We are selling. What does that mean? We are entering the market at a higher price range, exiting at a lower price range, and taking the profit in between. Okay, this is really important also for day trading. If you guys are not shorting the market, you are not traders, because we do not care if the market is going up. We do not care if the market is going down. For day trading, it's purely technicals. We want to go wherever the market is telling us is a good place to enter. Okay, if you are only looking to enter on a long, that means you are an investor. That means you're going to be buying and holding, which is super, but it's not day trading. It has nothing to do with day trading. I actually always say we day trade to invest. So they are 2 incredibly different things, even though they might be under the same umbrella of financial markets. Now, I personally am a scalper. I don't know if you guys have ever heard of scalping. Scalping is when you go for much shorter, shorter time frames and much smaller targets. So the cool thing is you could have an overall momentum moving in one direction, but you could have mini trends in between, and you could totally monetize on that. All right, let's talk about these consolidation areas. I literally call them, oops, hang on one second. I literally call them the trader's worst enemy, because this is literally where you end up losing almost all of your money. What is the consolidation area, transition area? It's this chop, it's this uncertainty, it's this bouncing between 2 areas, it's this consolidation area, right? This is when we start to spot these things. We want to figure out, we want to predict what the market is telling us. We want to pretend that we want to beat the market. Let me get this straight for you guys right this minute. You will never predict what the market is going to do, and you will never, ever beat the market. Those are 2 insanely powerful misconceptions, limiting beliefs. And I know that for the first 2 years of my trading, that's how I played it. And once I realized that they are just limiting me and all I'm doing is losing, when I realized that I don't want to beat the market, I don't want to predict the market, I don't want to know where the market should be going. What I do want to know is what is happening right now. And when I'm spotting this kind of action, this consolidation transition, I know this is for me to sit and not do a thing, because there are 3 incredibly important positions in the market. 3, okay? One is understanding where to get into the market. Two is understanding equally when to get out of the market. And three, and the most unused or the most untalked about, I guess, I don't know if that's a word, is knowing when to stay out entirely. Staying out is critical. And people are like, well, I'm doing nothing when I'm staying out. The amount of energy that it takes to stay out and know that you are deliberately staying out probably is more than knowing when to get in and out. And it's really, really important because you need to understand when it's not the right time to enter and it's just the right time. It's only to sit and watch and listen to what the market is telling you. This is these consolidation areas, okay? It's when we're going in one direction, all of a sudden there's all this indecision. Just because you might be a trend is your friend kind of a trader, you don't want to come up with a story that is going to continue long, or somebody like I was, a contrarian trader, coming up with a story that is going to retrace and go lower. No, those are lies. They're not real stories. The only thing that's real is that the market right now is going sideways and I need to sit out and not touch the market. Okay, and these areas can happen large or small. Because I go for smaller targets, this is a pretty important consolidation for me, right? And they happen all the time. And you need to understand when to stay out because you also have to understand when to get in after it breaks those areas. And that's what I want to talk to you right now about, areas. How do we even recognize these areas? Excuse me. Okay, so what are areas? First of all, the market respects areas. Okay, it revisits those areas over and over again. And if you are not respecting them and if you do not understand what those areas are, you're going to be losing. So what are areas? They are the support and resistance areas, right? So what is a support area? Support area is literally the floor of the market. It is where the market hits it 3 or 4 or more times over and over and over again. So I look at support and resistance areas similarly to a safety belt, right? Like imagine a Formula One driver. When they get in the car, they don't mentally put on a helmet and they don't mentally put on a safety belt, right? Because the chance of them dying is 25%. So they want to be super prepared, right? Like they really focus on their safety gear. Traders don't. They pretend they give this bullshit story of I have a mental stop or I have a mental idea where there's a support area. No, those mental areas, they don't exist, right? Because the ego is always going to win and your mental stop is going to continue until you have drained your entire account. So we need to be putting on these safety belts, right? The most logical one obviously is having that support, that stop loss in place and not move it, right? There's no mental stop losses. You keep it there permanently. The others are your support and resistance areas. If there's been an area that has been visited, revisited, and respected by the market, why would you enter there thinking it's going to break? What makes you super special? Retail individual traders, we have zero control. We cannot move the market at all, right? So when we see support and resistance areas, we need to stay out because the chance of it bouncing off and then retracing and hitting our stop is really high. And you don't ever want to be in a trade that is not going to give you at least 80% probability of a win, right? So this is sideways markets as well. Just because it's sideways, I don't see anything pretty about this, right? And it has a very specific area of sideways and choppiness, okay? Resistance areas, what are they? They are literally the ceiling of the market, right? It's where the market has hit it over and over again 3 or more times. Now, because I am a scalper, I only trade for about an hour per day, right? I can't do much more. It takes a lot of my energy. I'm totally focused in the moment. You can only spend so much time. Otherwise, you go into emotional trading and you're completely on zero, right? It's like talking on your phone when you have less than 1% with a really important conversation. You can't do it. So it's the same thing here. So for me, my entire session is about an hour long. This is about 1 hour long, right? So when I see a resistance area that is respected throughout my entire session, guess what? I am not touching any long positions because the chance of it hitting that area and stopping me out is really strong, right? And you have to know that. And this is my safety belt. I have put that safety belt on. I am secure. I am not touching it, but I will be really excited when it breaks out. And I won't know that breakout trade, which is one of the most powerful trades we could have, if there is no resistance or support area drawn in. right? So the main question I get from people is, okay, so I spotted the area, but it's too late. I've already lost. How do you recognize when it is just forming, right? And that is really important because how do we know when it's just starting? And that is through reversal areas and divergences. And I literally call this a trader's map to shift in direction. Again, guys, this is all basic stuff, right? It's kind of like you getting in the car and not having any idea where the brake or the accelerator is and just winging it, right? So it's the basics. It's the same thing here. And you do not need to buy algorithms or special softwares. Just having your charting platform, you get all of this there. So it's not like I'm teaching you something that you have to go and buy extra. This is right in front of you. And if you're not paying attention to this, unfortunately, you will not be a successful trader. It's just how that works. So let's talk about reversal areas and divergences. What are reversal areas? It's a double top, a double bottom, triple top, triple bottom, head and shoulders. Now, I personally use only two indicators. So what you're seeing right here, this is it. This is my chart. So I only use the EMA lines and I use my MACDs. The MACDs for me are the most important out there because this is where it shows me where there is strength or where there's weakness in the market. And you never want to be in a market which is about to become a weak. And when I'm seeing a reversal pattern and divergence, so I don't know if you guys understand divergence. You can see here, my two pivots are completely even and straight. Here, they're on a massive incline, right? So this is what a divergence is. Again, massive, there's straight here, massive divergence. I am being told right away, stay out. Because when I see divergence coupled with reversal pattern, that is almost 90% potential that the market is going to shift or the market is going to go into a flat area, right? And I don't want to be anywhere near it. To be honest with you, I don't actually touch the market when I see just regular divergence. As you can see here, the pivots are inclining while the pivots are completely flat here. Okay, same here. So that's just when we understand and recognize when these areas are happening. Again, everything I'm talking to you guys about is literally in the document and that free worksheet at makingofadaytrader.com. Everything. Okay, so breaking out of areas. How to spot a breakout. Okay, so we all know that breakouts are probably some of the highest potential probability trades out there, right? But if you do not know where you have a resistance or a support, because we don't care if it's going down or up, areas are, how are we going to know when there's a breakout, right? So let's put this all together. Remember, everything I'm going through and a lot more is in this worksheet, makingofadaytrader.com. makingofadaytrader.com. Okay, let's talk about the breakouts because these are the best and they're probably the easiest to spot. Now, what is a breakout? It's when you are headed, when you're trending in one direction, right? It could be up or down, and all of a sudden you get this channeling market, right? This uncertain area, this chop, this exhaustion pattern, indecision area, whatever you want to call it. And then it breaks through. So I'm going to give this to you guys in layman's terms about what a breakout is. One of your best friends or your sister, brother calls you and says, hey, come over and have lunch. You have been to your friend's house or you've been to their house 1,000 times. You could pretty much do a blindfold, right? So you jump in the car, you live south and they live directly north of you. You hop in the car, you hop on the highway that you're super confident knowing, but all of a sudden, there is a construction site. And the construction worker is like, no, you got to get off. There's a detour. So I don't know about you guys, but during those detours, this is when I get totally stressed out because it's super uncertain. I don't know where this area is. I've never been here before. What if they stop with the detour signs and I'm left in the middle here and I don't know where I'm going? That happens plenty of times. What if I'm driving and all of a sudden they say, sorry, the road is completely closed. You have to stick to the side roads, right? So during this time, you're in complete doubt. You have absolutely no certainty of what is going on. Would you want to bet money on anything there during that time? No, this is that transition area. This is that consolidation area. But then all of a sudden, the construction worker is like, okay, the road is fixed. Boom, get back on the highway. You are back on your home ground. You're totally confident. Boom, you are flying to your friend's house, or a sister, whatever, brother's house. This is a breakout. It's when you are back in the that area, seeing that confirmation, and headed in that same direction. Now, this is a breakout trade. But if you do not have your resistance, do not have your support areas drawn in, how are you going to be able to spot when that happens? So you got to make sure you understand how that works, right? So this is that breakout. So I use my MACDs for everything. So when I am seeing massive strength in my MACDs, this is the zero line, and this is that massive strength. And the movement here, I take everything off of my EMA lines. It's like an archer, right? They walk around. They don't walk around aimlessly. They actually have a place they stand from to take their trades. That's exactly what I do. Now, I want to do a quick bonus tip before I go into the live market and show you. Bonus tip from the Cirque du Soleil performers, they dominate one area, right? They dominate one area. I can guarantee you this woman is not going to hop on a motorcycle and start doing flips, right? She'll die, she knows that, but she's mastered this area, correct? Now, the reality of this is that day traders, aspiring ones, want to trade a million different instruments. You cannot become a master of all. You need to focus on the one. You need to dominate that one. I only trade the ES minis. You guys could trade whatever you want. I'm not telling you to do the ES minis, but if you're going to be trading, maybe the NASDAQ, maybe Russell, maybe crude, maybe if you want to do stocks, maybe only focus on Tesla, Apple, Amazon, or a sector, not all the 5,000 stocks, which, by the way, a lot of people think they can do. And they do very poorly and end up losing, right? So that is another tip that I just wanted to let you know. Now, remember, makingofadaytrader.com, and we are now, going to check out the live market. So today is obviously a beautiful market. I mean, we're almost hitting at 4,000, which is super cool. Okay, so I wanted to just show you how I work with the market. So here we have a pretty significant consolidation area, right? I mean, it's really strong. You cannot deny that this is a consolidation area. The market's been moving up, all of a sudden, boom. But then we have a breakout. Look at this. We have a massive breakout with the MACDs, massive breakout here. It is looking gorgeous, right? But if I did not recognize that, and I would be getting in. Look at how choppy, how grindy this behavior is. And if you don't have this marked off, you won't really understand what's going on, right? And then you have this beautiful movement happening, right? But if you're not prepared for it, how are you going to be able to recognize it, right? And again, these are super easy to spot. You have to understand where it's hitting over and over and over again. And you can see these channels, okay? Let me see if there's any questions here. Okay, so what time frame do you use for my analysis? So good question. I do not use a time frame. What I use is tick charts. I don't know if you guys have ever heard of tick charts. So tick charts, as you can see right here, it says ticks remaining. So what tick charts are, and I use the 610, is each bar has 610 transactions. The reason why I use tick charts is because it's the real time. It's what's happening in the moment. The most important thing for us is to understand volatility. If we have really low volatility, it's going to be boring and probably a lot more indecision. But when we have a lot of volatility, as you can see right now, it's really moving smoothly. That means there's a lot of transactions. That's when we want to be more in the market, right? So that's what I use. I use the 610 chart. I don't like to use, because if I'm in a 5-minute chart and I have my volume indicator, which is really lagging indicator, I'm not really going to know what's happening in real time. So that's why I personally prefer using tick charts. Okay. So here's my MACDs and here are my EMA lines. Before I move back to the presentation, are there any other questions that I could answer with my charts or anything specific? All right, I'm gonna get back into the presentation. So as you can see, this is the ES Mini, which is literally the S&P 500 index on the futures market. I prefer it because you don't have to put in all of the money in. You could just go for one contract, which is usually $50 per 1 point per contract. Okay, so let's continue. Now, imagine if we could do this together every single week, going through all of these different signs, symbols, understanding what the market is actually doing, and understanding how to read it and being able to spot these higher probability trades, right? So let me break it down for you, because this is the most exciting part of the presentation. The thing is, guys, I can bet the farm that 90% of the people in here who are right here right now are probably self-educating, reading books, and I think that's great. I mean, we've all been on that road through self-educating, but at the end of the day, or even taking courses that aren't, there's no actual person helping you. But the reality is, at the end of the day, is how do we know we are doing it right? How do we know if we're doing it right? Who is there to monitor you, to help you? Okay, so I'm going to break this down for you guys. I've made something really, really special. Okay, when you get the cheat sheet, you immediately get put on this on exclusive VIP list that I have for you. And I want to encourage you, because the only people that are going to be getting on this VIP list are people that are actually in the presentation. Nobody else. So I really want to encourage you. Plus, you get the free worksheet that you're going to be able to use and implement once you get the replay as well. So you got to go to makingofadaytrader.com. And this is going to be a true turning point for you guys. I can guarantee this. This special invite coming into your inbox only for the people that are live in this presentation. So here's what I've got for you. So many people ask me if I have a course or if I have some sort of a training, and I do. So this is my signature program, Simplifying Day Trading Futures Program. So what it is, it's my signature program. It's broken down into short, bite-sized videos, explanations that I literally show you what I do every time I sit down to trade. And you can do it from any device. You could use it from computer, a laptop, phone, iPad. Basically, in essence, I will be sitting with you side by side during this whole course. And again, I only make the special invite to people that are getting this worksheet, makingofadaytrader.com. You need to subscribe there and you'll get that. So, like I said before, how do you know you're doing it right? And I only am offering this only to the people that are during the presentation. You get to work with me for 6 months, one-on-one mentorship, one-on-one coaching that you will be coming to me. So you don't have to wonder if you are doing it right. You are coming directly to me and we are working together. This is only offered for the participants during this live presentation. And on top of that, I'm giving you an extra special bonus. I run a live trade chat room where everything we learn, we go through live, and where you see me implement it. And also I am there live. I do not hire moderators. You do not have random people saying take trades here or there without understanding. It is me, 100%, and you get to work with me during that time, as well as also the mentorship, okay? And the only way to get this is if you sign up, makingofadaytrader.com. And because the curriculum is so robust and there are so many things, you get a lifetime curriculum access. You will always have access to this curriculum. Okay, now I am not going to be releasing the price, but I can guarantee you one thing: it is less than the average trade that you are taking and are not sure if you are doing it right. The program is less than the average trade. Okay, so remember, makingofadaytrader.com. But here's the thing, and I know that there's always a catch, so here is the catch. I am only able to take 25 students because of my one-on-one mentorship that I really focus and work with you and really give you the feedback one-on-one. I can only focus on 25 students at a time so that you get my full attention and my full commitment to your trading. Okay, so remember, when you get the free worksheet, you get put on my VIP list and you're eligible for the 6 months one-on-one trading and mentorship. Plus, you get 30 days in the live trade chat room, lifetime unlimited access to your curriculum and to me. Literally, you can ask me questions, send me questions all the time. So go for it. Makingofadaytrader.com. All right, so what does that mean? Let everyone know to use capital letters. I'm not sure what that means, but makingofadaytrader.com, and you are able to get everything that I just spoke to you guys about. So please let me know if there's any other questions. And again, I am really, really grateful you guys are here today. And I know the reason why you guys are here is because you want to learn. You want to get past your challenges, right? And the only way to do that is through implementation. Okay. So again, you're going to be receiving this entire presentation in replay. So if you, once you have the worksheet, makingofadaytrader.com, you can go through it at your own pace, and you could always email me and ask me any questions as well. Okay, guys, thank you again so much for having me, and thank you, Anna, for having me here as well. Okay, bye, everybody.
Okay, so well, again, thank you for being here and having me on your expo here today. So what we're going to talk about are ways to kind of tilt the trading odds more into your favor, especially when we're in kind of more uncertainty type markets, which we've been into. We're starting to see some, good signs of potentially bottoming out here, but we've had some pretty rough swings in the market over the past few weeks. And so what I'm going to talk about here today are two really fantastic, really high reward, low risk type option strategies that are great to use in any type of market environment, but especially when we get into more uncertainty type environments and higher, kind of volatility type markets. So the following presentation is purely for educational purposes. Any stocks, options, or futures mentioned does not constitute advice and should not be construed as a recommendation. So, to me, the secret to trading profits comes down to three primary things: direction, timing, and then options for your trade management. So what I call a lot of times is opportunistic risk management. And so by using options, we just have so much more flexibility as to what we can do. Now, option trading has so many more advantages than just trading outright stocks, but as you probably know, it can be a bit more complicated as well. But once you understand the benefits and the advantages of options and option spreads, you're really going to never look back. You're going to just want to kind of stick with trading options. And when used correctly, option spreads are going to provide you very defined trading risk on all of your trades taken. It's going to lower the capital at risk, and that's the big positive. Give you greater trading leverage and potential returns on that lowered risk, and they're an unmatched way to hedge for any trades that you get in trouble with. Now, I've been trading options for over 30 years, and I've found that the most valuable go-to option strategies that can literally help any trader out there more than any other strategies known, and especially during times of extreme market uncertainty, are the option butterfly and a long condor. So they're kind of my trading secret weapon. Now, the huge advantage of these strategies is their very unique option type framework that's designed to take advantage of time decay, the big pricing component, and volatility, the two main option pricing components, to stack the trading odds, in your favor. And these can be used in any type of market environment, which makes them a perfect trading strategy, and especially for uncertain markets, if you just know, when and how to use them. Now, because they are structured to require only a small amount of your hard-earned trading capital, your trading returns are going to be greater on that risk that you're putting up on each trade. And the other thing that's great is that this is going to really reduce your trading stress because of that lowered capital at risk. So to me, that's a major win-win situation. Now, the butterflies and long condors, they're very dynamic, and they can be traded for a variety of different reasons with different goals in mind. So in other words, you can learn to use the butterfly and condor, and you're going to be covered for both your offense and defense. So your goals, your profit potential, or profit and hedging. So they've got so much flexibility to these strategies that they're just very dynamic in that regard. Now, they can work no matter what the market direction is. So we could be in an up, down, or sideways market environment. They can provide income from stocks or securities that are going nowhere. Really helps to eliminate that stress of having to be perfect on the stock's direction or securities direction or the overall market direction. It's going to eliminate the time decay expense that you encounter from decaying long options, which is a big thing that bothers me, is that time decay. And it really helps to take the unsettling guesswork out of your trading. Now, they can also be structured for very, very low cost or low capital at risk, and it can offer you a 10-to-1 or higher reward to risk ratio, which I'll show you here in a little bit. Now, the other benefits of the butterflies and condors, they're very flexible, as you're going to see ahead. I'll show you a lot of different trade examples here today. So once you learn the fundamental setup, then you can adapt these option strategies for both your goals and your market insights. They can be kind of delta neutral if you want it to be that way, but to me, the real beauty is that they are really great for offering you a bullish or bearish exposure to the market when you feel pretty confident or sure of a stock's direction, one way or the other. But the really great benefit is that if you're wrong, the butterfly and long condor are really going to help you to manage that risk, and at the same time lower the risk, but also retain your potential for a big, return on that trade. And that's what's such a big win situation as well. Now, let's be real though, these option spreads, they're going to not offer you that unlimited profit potential, such as if you just go long calls and you get it totally right. But they're usually going to cost you a lot less than buying the outrights, and they're going to offer you an amazing risk to reward trade setup. So this means that the butterflies and long condors can significantly increase the probability of your winning trades, while also at the same time reducing your risk. And that's really what it's all about. So the first thing I really always look at on a trade before ever doing it, I look at the risk first and then the potential profit or reward to that risk. So to me, that's a key component. Start looking and focusing on your risk first, and then your reward or risk on that return of that risk. Now, the other thing with the butterfly and long condors, they are fantastic for hedging when you mess things up. So they can be used as a fast, low-cost way to cover your you-know-what pronto when a position starts to move against you. And I've literally found no other hedging strategy that comes close to incorporating either the butterfly or condor hedge on a kind of core trade position. Now, by constructing either a butterfly hedge or a long condor hedge around a strike that is under pressure from another kind of core trade, such as a credit spread or a debit spread, it becomes a really best way I've found to immediately neutralize and lower that capital at risk on any trade you have. So how many people here do credit spreads? This is a really great advantage for the butterfly hedge is for credit spreads. And if you've ever done credit spreads, they can be great, but if you have one that goes against you, it can ruin your day and ruin all these other trades. So here's one of my members, Pam, she said, I wish I'd known how to do this hedging before I lost so much money on credit spreads. And that's so true, because the credit spreads are great while they're working, but if you ever get one that shoots through your short strike, you've got a lot of trouble, and you end up giving a lot of that profit on those past trades, right back. Now, when we look at the hedging component, what you can do with this kind of hedging strategy is you can keep your original position open by just implementing either a butterfly or long condor hedge on your original position. And the thing that it does, it takes advantage of the time decay pricing component of an option. So that time decay while you're waiting, you're taking advantage of that because you've got that selling component for a butterfly or condor, so you get that time decay or positive theta coming out of it. And a lot of times if you'll put on a trade, it looks perfect, it's going your direction, but then something happens, a headline or whatever, and stalls the trade out, so it pulls back or maybe goes sideways, and you're uncertain as to what to do. Should you stop yourself out or should you stay with it? But by doing this hedge, the thing that is, while you wait and pause for that trade to maybe stabilize, you're getting paid while you wait. And a lot of times you're going to actually reduce your trade cost. So then, once it stabilizes, you can then have the option to remove the hedge and stick with your original trade, write it for what it's worth. Now, when we look at the structure, they're pretty simplistic when you take it down and break it down. So here's basically what we're looking at. So this would be like a call debit spread. Or you could do this calls or puts with butterflies, condors, it doesn't matter, but this is an example. So let's say you're long a call, short a call here. So call debit spread, and your risk then is the debit paid. So what I always try to do and teach my clients and members is, try not to ever lose your total at risk, even if it's defined. So we can easily reduce this risk of this debit spread. We can convert it to either a butterfly or a condor and knock down that risk and still have a great trade structure, which even offers a bigger potential return on the risk. So I could take this trade and I could sell a credit spread against it, sharing the same short strike, bringing in $200 per contract credit. And what I've done is converted this trade that originally started as a debit spread to a credit spread by adding the credit spread to a butterfly. So now I've got this kind of profit zone. We call this the tent, and it gives you a zone in here of profit. At the top of the tent is your maximum potential profit. But what you've done in this example, you can see that you knocked your credit or your risk down from 300 to 100, and then your potential profit is still in a nice profit zone. And if you get your maximum profit here, you're going to get even a greater return than what you would have had on your original trade. Now, with the butterfly, we can then structure the risk reward based on the spread width of the butterfly. So we can make them real wide for more profit, for bigger zone, or narrow. But that's the basic construction that we're looking at when we do a butterfly. Now, the other one that's kind of a little off take of the butterfly, though, is one that we do a lot at Power Cycle Trading recently, because it's such a defined risk trade, it gives you a bigger profit zone, and that's the long condor. So instead of having a kind of tighter profit zone like a butterfly, we can spread out the spread width of it to make it wider to give us this bigger zone versus the butterfly. So they're both great structures. In different situations. They're ideal. And typically, what I'll do, the first hedge I usually look to is doing a long condor hedge on a core position that might start to stall. So we'll go through some examples, and I'll show you how these work. So that's the basic kind of layout construction of these two option spreads. Now let's take a look at the core concepts that really make the butterfly and long condor a dynamic option strategy. So the most important option factor, for profit generation using the butterfly and long condor strategy comes down to truly understanding the option pricing and how it works, and the concept of time, decay, and theta, and how that affects the price of your option. So let's take a look at that. Now, when we look at the core concept here, theta and implied volatility, they're two main pricing components. But when we look at that one option pricing component, option time value, or theta can tell us how much your option price is going to go down over time. So this is the rate of time decay of your stock option. Now, time decay occurs because the extrinsic value, or that time value of your option, is going to go down each and every day, and it accelerates as you get closer to expiration, and it's going to be at zero at expiration. So with the butterfly or the condor, we've got a sell side component to the option spread that takes advantage of this theta decay. So let's take a look at a construction of the butterfly and the dynamics of it, how you can keep your price and your risk super low if you want. So here's XYZ, it's trading at $45. And we're looking for a target here to 43. So with any trade setups that we do, I always have a price target before the trade's ever put on. So typically we'll use Fibonacci and moving average support resistance levels. So in this example, we've got a price target to the downside of $43. And we're going to target that. That's usually what we'll use as the body of the butterfly will be your price target. So in this example, we'll have that will be the body of the butterfly right here. So we're going to look for a downside move, and we're going to use puts. So we'll buy the 44 March put, and we pay $202.38 or $238 for one option contract. Then we'll sell a 43 put, okay, and we'll bring in $1.67. And then we're going to sell another $43 put, bring in another $1.67, and below that buy the 42. So if you break this down, it's two different, vertical spreads. You've got a put debit spread, and then you've got a put credit spread, and we just created a very narrow wing butterfly. So the risk then on this trade is your debit cost here of 43. 43 would be your 238 would be your debit cost, and then the debit cost of the 42 put, and then less the two credits that you receive for selling the 43 times 100 to make it an option contract. And you can see that on this butterfly, if you did one butterfly spread, your total risk is $10. So that's what really makes it a fantastic trade structure when you're in a kind of high implied volatility market, or a lot of market uncertainty, because you can get your risk super low. So if you are wrong about a trade setup, you can really keep your risk under control. Now your profit, you just take the spread difference, so like 43, 44, 43, 43, 42. So you can see it's a dollar wide spread okay, less the cost of your trade here, $10, 10 cents, and that gives you your potential theoretical profit of 90 cents or $90 per option contract on this butterfly spread. So you look at that, you theoretically could make $90 on a risk of 10. That's a 900% return, or 9 to 1. So risking $1 to make 9. So that's what makes it fantastic in any market, but especially when you're in really extreme uncertainty. Because if you do get it wrong, your risk is super low, but if you get it right, you still have potential for huge returns. So that's the basic, really big advantage of using a butterfly or even the long condor. And of any option spread, the butterfly will have the largest or greatest return on risk of any other option strategy out there. Now, let's take a look at the best butterfly. How do you choose and know what the best butterfly to use or condor would be to suit your trading goals? So one major goal to me, for every trader should be to look at selecting trades that are based on what's going to provide you the most consistent positive returns with low defined risk over time, and not always that greatest return. So like I said earlier, I really focus first, I look at the risk of the trade, and then I see what is the potential profit on that risk. So I kind of start from the backside of it. And one of the best ways to then achieve this goal of, what strategy to use is then obviously be aware of the different option strategies that are out there and available to you, understand how they work, and then look to select the one that's going to be best suited for the market environment you're trading and your specific trading goals. So everybody here today will have a different amount of, potential trading capital, so John might have 10,000 in his account for trading, and Sarah might have 100,000. So that's going to make a difference, or the time that you have to trade. So you want to look at that and then kind of adjust that to the different strategies that are out there. And one thing you'll notice once you do look at the butterfly condor, that there can be strategies you can use for any account size. It can be an account with $1,000 or account with $1 million. It doesn't matter. They're great for any account size. And again, the beauty is that lowered capital at risk on any trade that you're putting up. So let's take a look at the different strategies that are available. So we're going to, this is kind of what I call the butterfly family. And the kind of the main component to all of them that they share is that when we do these structures of this spread, they're selling time and volatility is a big part of the spread. So when we look at the butterfly family, we can do either long or call or put butterflies. We can do what we call the broken wing or skip strike butterfly using calls or puts. We can do an unbalanced butterfly or ratio butterfly that I kind of refer to as the ninja. And then we can do an iron butterfly. And then we've got a whole another part of the family, the hedging component, where we can really use the butterfly and the condor for defending trades. And then there's that long condor, which is a very similar trade structure to the butterfly. So let's take a review of these different butterflies, and I'll show you a bunch of different examples so you get a better feel for how they work. First, we'll look at the butterfly. Now, when we look at a butterfly spread, we can adjust the risk and the profit of the spread by what we call the wingspan of the spread. All right, so if you think about if you're a butterfly, enthusiast and you want to catch a butterfly, it's going to be a lot easier to catch a butterfly if you have a big, huge net, right, versus a small net. So with the butterfly spread, we can actually use kind of the same concept. So the wider that we get the butterfly, the bigger profit zone we're going to have to catch profit. So we're going to, have a bigger zone of profit, but by widening it, we're also increasing our capital that we're putting out at risk. But it's still a great strategy to use. Now, if you really want to make a really low defined risk trade, we can do a narrow butterfly, and it's almost, sometimes we refer to this almost as like a lotto trade, because you can structure these for so little risk that if you do get it right, it's a huge return of 1,000 or even more return on your risk of very, very small amounts of money. So let's take a look at some of these examples so you can get a good idea. Okay, so first we're going to look at a narrow wing butterfly, and the ETFs and index options are great for butterflies. So, SPY or QQQ, IWM, and then SPX and NDX, the RUT, these are great for butterflies and condors. So this one is a narrow wing butterfly. So we were looking for a move up. I like to use, we have a trading model that's based on using momentum for direction. And this trade setup, we were looking for a Fibonacci target here, the 618 retracement, which was coming in about 273, 274. And there's also a lot of option activity here. So I kind of look at a bunch of different things to give my, potential targets. So this looked like a solid target. So we set up a butterfly targeting 273. And we did it with a very low risk trade, the butterfly, narrowing butterfly. So to control and reduce that risk, we did this just $1 wide on the butterfly spread structure. All right, so again, we were targeting 273. So that's going to be the body of the butterfly, the target. Now you can see here that the structure was just buying the 272 call, selling the 273, and then selling that 273.74. So $1 wide spread, okay? That gives us a potential, that's $100 then per spread. So one option contract is equivalent to 100 shares. So $100 spread width minus, look at the cost of trade, $10. So this was a debit cost of 10 cents when it was structured. So the maximum at risk on this trade per butterfly contract would be $10. Now, if we did hit that perfect expiration and pinned at 273, theoretically this would make $90, which is 900% return. Now with a butterfly, you'll never exactly ever hit that full profit point, just because the theta decay and stuff, you won't be able to take it all out, but you can get pretty close. So in this trade example, we actually did hit it pretty close and made $70 per spread. But if you look at that, that's a 700% return. Okay, $70 on $10, and that's huge, right? So these are great for, strategies where you want to really control that risk, and they've been really good ways to short the market here, because it's very difficult to be shorting the market, because a lot of times we'll get a move down, this snapback. So we can really control our risk using the butterfly to short, and I'll show you some examples. So that was the setup there. Now, when you look at it, here's the risk profile or the profit profile of this butterfly trade. And you'll see here it's going out, this kind of looks like a tent, and it's going out. The purple is what it's doing in time. The teal is what is actually the price at expiration at any point on that butterfly. So here it was going out pretty close to the target. It was going out at 273, and this is right into option expiration on the Friday the 16th in this example. So this was then, went from 10 cents or $10 to $80, which is your profit of 70 per spread on that risk of 10. So that's, your 700% return. So this example had just 4 contracts and over, $280 there. But that's the beauty of it. And we're taking advantage of time decay and volatility collapse and giving you a high return on your capital at risk. So that's one example there. Now, here's another way that it's been great to use, and this is for shorting. So again, it's been hard to short this market because the moves are kind of quick and can be pretty vicious on the short covering side. So this is an example of using a butterfly to short using the market, the ETF SPY. So this is a spread width of $5 or 500. So we were looking, this was a short trade setup. The market was trading at about 392, 393, and we were looking for a move down here to this kind of area here, 287.5 down to potentially 286 right there, based on option activity and Fibonacci levels in this moving average. So we structured a butterfly to take that short trade, and targeting our target was like 385, but we did this with a wider butterfly, $5 wide. So bought the 290 put, sold the 390 and sold the 385, then sold the 385 put, bought the 380. Okay, so it's a $5 wide spread or $500 minus the cost of the trade. So look at the risk on this trade, it's 50 cents or $50. So that's one of the great things about the butterfly, is that if you're doing a trade and it's a high kind of risk trade or high market risk, we can really structure the at-risk part of the capital at a very low cost if we want. So this was at $50. Now look at the potential profit on this trade, though. Theoretically, the balance would be $450. So if we nail this at expiration, that's what's been hard to do at shorts, is the expiration. this would make 450 per spread, or a 900% return on that very low capital at risk. Now, 2 days later, though, we had a good return. We made $86, which is, if you look at the return on that risk, then that's 172%. So we were just looking to short, and we wanted to keep it really, really low risk, and this was a really great way to do it. Now, you'll see the body here, the big tent. All that black here is what's still left in this trade for potential profit. But since you're not going to get on the option trade your max profit until expiration, what we do a lot of times is make this wider wing butterfly, so that if it does come down anywhere inside of our profit zone, we're going to make a profit. And based on the low capital at risk, it's a really great return on your risk. So here's where we took it off, was right here. And so it was trading at 287.90. That was close enough, because we, going into the trade, we knew there was a good chance that this would swing back up on the short. So that, though, was a $86 per spread profit on that $50 at risk. It's a debit cost risk. So there's no margin, it's just your debit cost. And that, on that risk of $50, was an 172% return. So you can't match these kind of returns with any other option spread strategy. So that's an example of how you can use it for the short side. Now, the other great advantage with the butterfly, or wide wing butterflies, or butterflies in general, it allows you to trade really high price stocks. Okay, so for example, if you're interested in trading Amazon or Tesla or Nvidia or some of these higher flyers, a lot of times, based on your capital account size, you're not going to be able to do it because of the capital that is needed to be put up. So here's another way you can do it with a lot less capital at risk and offering you a bigger return. So here's an example of going long on Amazon using a butterfly with a $3,000 spread width. All right, so Amazon was trading at 31.50, and we were targeting, again, always have a target 3,200 to 3,220. So set up a butterfly. Now, if you wanted to trade Amazon and you're just buying calls, you don't know anything about options, not buying calls, but buying the shares, in this example, you'd have to put up $315,000 to buy 100 shares. Okay, so, and if you did hit your target of $3,200 right here, well, you made $50 a share, but look at your return, it's only 2.33%, but your capital at risk is $315,000. Now, to do the same trade, though, as far as a directional trade to the upside, we could do this and structure a butterfly. So if you look here, we did a butterfly and we targeted 32.20, and then we did that using the 31.90 call long, sold the 32.20, so $30 spread width there, and then sold the 32.20, 32.50 here at $30 spread width, so $3,000. So when trading these high flyers like a Tesla, Amazon, things like that, we tend to look at really wide wing butterflies so we can get a big profit zone and take out a little bit of the profit when it hits in that zone. All right, so in this example, you can see then your total risk per one option spread was $388. So equivalent to 100 shares, we're putting up $388 versus $315,000. And if we nailed it at 32.20 at expiration, theoretically, this would make $2,612 per spread, which is a 673% return, or risk $1 to make almost $7. All right, but we're looking at just making a little bit of it, and so it's a great way to do it, and keeping your risk super low. So if we make it wide and we get the direction right, we don't have to have the direction perfect. We just have to have it close enough, and it's a great way to participate. So this was then going out at pretty close to 32.10. Our target was 32.20. So it's going out right here. You can see the profit zone. So this went from 388 to $14.26. So that's our profit of $1,038 per spread on that risk of 388. So this had a return of 267% per spread, so equivalent to one option contract, like 100 shares, versus if you'd done the shares and had 315,000 at risk, you made, what was it, 2.33? So there's really no comparison as far as the way to do trades if you understand how to use these. Now here's a great example again of a butterfly with Amazon, and this is another benefit that you get, in this trade example, you're going to see that we set this up and at expiration on a Friday. In the morning, this was up about 150%. And then in the afternoon, it was up over 600%. And that's the bigger advantage of that time decay component. So here's another great example. So here was trading right around this 200-day moving average. We're looking for a target to about 1830. So we targeted 1830, and so set up a $10 wide spread, 1820, 1830, 1830, 1840. Now again, if you'd done the options bought the shares, you'd be putting out $178,200, and if you did hit your target, you made $48 per share, so 2.69% return. Now on this one, look at the spread cost for $80. That's your maximum risk. Now your potential return is your spread width of 1,000 minus that 80, so 920. But here's the other big, huge benefit. So this was about 9:30 in the morning, 9:30, 10 a.m. on the day of expiration. So you can see this trade went from 80 cents to 230, or $80 to 230 on that spread. So it was up $150 per spread. Okay, just hitting a little bit of that is great, just enough, and that's 187% return. But look at this return. This return goes up 4 times in the afternoon the same day because of all. See that black area? That's all what's left of the potential profit of time and volatility. So here it was about 2:30 in the afternoon, and now you can see there's very little left of potential, that theta or time decay. So now it was from 80 cents. Now it was trading at $695 per spread. So it's up $614 per spread profit, and that's a 769. So 4 times more profit, 4 times bigger return, and on a super low capital at risk, and that's in one day. So that's what really makes it a great structure. And here's an example of a long Condor spread trade. This was on Boeing, kind of a breakout trade, and we wanted to keep our risk super low. So we did this as a long call Condor. And look at the risk here. We set the trade up with only $65 at risk, but we have a bigger profit zone here. And so this went out trading within the zone here. See, we've got this bigger zone. So it went out trading here at 215. And so it was up $106 per spread, but look at the risk, only $65 per spread. So up $163 per spread there. The potential on this was, for $185 if it went out at the close between these short strikes, but we took it off early. So really great trade strategy to play an upside or downside move, giving yourself a bigger zone. Now here's another way that's beautiful way to use these strategies for hedging. And so this is kind of an opportunistic hedge trade that we did with the Condor and set this up and created a free trade. So we were looking for a short trade here, SPY, for a downside move here at this to about 270. So when you put on a trade, I always try to teach our members to always think 2 or 3 steps ahead. So what if it gets to your target? Then is there any way that you can increase your trade profit and reduce your risk? So we were looking to see, okay, if it drops down and hits our target, could we convert this to either a long put Condor or a butterfly and collect back our debit cost and make it a free trade by the credit spread side? And that's what happened. So you got to think ahead, and if it works, man, sometimes it can turn out great. So this was doing a put debit spread, the 273.70. Okay, really nice structure. Total risk $65. Potential to make 235, but it's hard to short the market because it tends to bounce back. But a nice structure. Now on the 29th, this hit down towards our target area of 270.71. So took some profit, $98, not bad. So 150% return. But the other part of the trade, instead of taking it all off or leaving it alone for expiration, we were able to convert it to a put Condor by selling the 268 put, buying the 265, same spread width as the put debit spread, and did it bringing in a credit of $65 per spread. All right, so then that offsets the debit cost of 65. So now we're in a free trade. So the short trade, the 270 put debit spread, was costing us 65. And then when it dropped down towards our target, we were able to sell this 268.65 for 65 credit. So 0 risk on the rest of the trade. and then you can just kick back and see if you can kind of squeeze it out into expiration. Now it's going out right here, not perfect, but good, very, very close, very, very good. And you can see at this point in time it was up $164 per spread on zero risk. So in all, trade one did okay, 98 per spread or 150% return, but the adjustment to trade two, zero risk, and made 164. So just so many different ways that you can use these to your advantage. So, if you'd like to learn more on how to master these high reward, low risk option strategies, there are two things you can do here. First, hopefully you got a good, kind of sampling of things that you can maybe incorporate right now. But if you want to really master these, I just completed in December, just recently, an options master's course on the butterfly and long condor. So this is an all new course that's now recorded on demand, broken down in modules like chapters, and it's just specifically on the butterfly and long condor. So it's a 7+ hour course broken into modules of 30 minutes or less, like a chapter of the book on the course. So you get that, and then you get the full PowerPoint. My courses are very detailed, so that's your kind of training manual, 465-page PowerPoint for the course, and then the recordings. We'll do one follow-up Q&A live and record it as well, so we'll send you a link to that. But all this package plus 7 more bonuses will be $197. So let me show you this, and then I'll go through what you'll get out of it. But if you'd like to take advantage of this, you can get it. It's yours forever, and it's just your investment in it is $197. You'll get that back, really fast. So if you just click on that, it should pull up a payment link that you can use, and use that, and then you're going to get everything here that I'm showing you. So just use that link, or you can copy and paste it in your browser. So you'll get this full new options master's course here, and you'll get all the videos on the cloud, and you'll get the PowerPoint that you can download if you want. But it's yours forever, and if you lose your login, just let us know, we'll get it back. But in addition to this fantastic course, you're also going to get my new options for beginners. So if you're just starting out, this is a really great package as well, because you're going to get my new beginners options course plus my options beginners program. So it'll be a good library for your trading for options. So it's a great way to start, and you'll be able to follow along with this options master's course because it's very broken down in specific segments. And again, it's yours forever. So you'll get that, and then you'll get the follow-up live Q&A, which will be live. We'll send you a link for that, and that will also be recorded. You'll get my other bonus too, which is my option trading tutorial, basically just another option course on the Greeks, how option pricing works, standard deviation, things like that. You'll get my complete option strategy manifesto. So this is 15 other option strategies, how they're constructed, when to use them, and my Greek power tool guide, what the Greeks are, so you can print it out, put it on your desktop. Plus, as a big special bonus, you'll get a trial membership to my trading club for 30 days. And now you can start this whenever you want. You don't have, if you buy this course today, you can start it in a week, 2 weeks, whatever. Just send us an email. We'll start it when you want, but that'll be 30 days. And then hopefully you'll decide to stay. And then it's either $97 a month, or you can do an annual membership for $488. So very cheap. So here's everything here. So now let's take a look at, what you'll get. So you're going to get this 7+ hour recorded, brand new on-demand options masters course on the butterfly long condor. So kind of my blueprint course on how it's used for income, direction, hedging. We'll go through the details. So part one, start out with the option Greeks that are vital to the butterfly and long condor, how they, affect the trade. Theta decay, how it impacts butterfly and condor. The volatility, the importance of it, and how that impacts what we call volatility crush, what that does to the butterfly long condor. So a lot of this is also going to be things that will help you with any of your other option trading, not only the butterfly and condor. And then very important to understand how pricing works of an option. So spend some good time there in the course to explain the pricing of the option, how that works, and the effect then of time and volatility on the option price. And then use what I call the price target mapping. So spend some time in the course on how to use Fibonacci price target mapping and standard deviation for selecting your price targets. So a really important part there. Part two, we go through kind of the core basics. Most people are kind of, really don't understand what is a butterfly or condor. So it kind of demystifies that, and then go through the foundation, what makes these spreads work, the vertical spread, and then get into the, nuts and bolts and go through the how, why, and when to use every different variation. So go through with trade examples of how, why, and when would you use just a long call or put butterfly, a wide wing butterfly, a broken wing butterfly, ratio butterfly, a broken wing ratio butterfly, iron butterfly, vacation butterfly, and long condor. So course takes you through each one of these different variations with trade examples of those. So you get a really good feel for how, when, and why to use it. So then also, what are the best time frames? Should you go out, 2 weeks, 3 weeks, 4 weeks, or should you go closer in? What are the best things to use, ETFs or index? Then how do you get those 10 to 1 or higher returns? How to structure these trades, and then how to, actually take advantage of volatility collapse and theta decay, how the importance of that affects and creates the great profit potential. And then another fun part and great part of the course is monthly expiration. So next week we've got a monthly expiration, so 12 times a year, right? So this is another potential stream of income you can add to your trading, and it's based on what we call option pinning. So what this is when we look at option pinning, it's trying to select a strike price where the monthly option could go out and settle. And so to do that, we use price target analysis to set up our targets, okay? And that's explained to you in the course and shown how to do it using unusual option activity and Fibonacci. And so then we use those to target, and then we can structure a butterfly at those targets. And these can give you, some pretty big reward to low risk the way we structure it. So that's part of the course. And then we go through the long condor, the advantages of the condor, okay, the low capital at risk, and how, why, and when to use. And then the big part of the course, in my opinion, is the biggest part, most valuable part, is hedging, okay? So this will step you through the checklist of what you need to do first. But then in part 3, this course takes you in what I call the progression of hedging. So how could you hedge shares, or how could you hedge a call? So it goes through the progression of the different hedges you could do. And then we come into how to use the butterfly condor hedge to hedge your core position, or to hedge a vertical spread or a credit spread. So you'll learn the credit spread defense using the butterfly. And then execution management of the butterfly, and then you get resources, what is assignment risk, what to be aware of, expiration, auto exercise, and a trading library, a 58-page trading library of past trades that you can go and look at. So it's an excellent class. Here's Pam. She said, as usual, under promise, over deliver. Wish I'd known how to use this hedging before losing so much money doing credit spreads. And then here's Jim, pretty kind of the same thing. Thanks again for showing so many ways of getting out of trouble. Could have come in handy in the past, and my P&L would have been totally different. Thanks, Jim. Alicia says, I've never seen anyone explain options like this. This is exactly what I've been looking for. Very informative. No one else is anything like this. Wish I'd found you sooner, but glad I found you now. So that was Alicia. So here are your bonus packages. And oh yeah, here's the link again. If you need it, just click on it or copy and paste, and you'll get everything here sent to you. So you're going to start off with my brand new Option on Demand beginners course. And even if you don't stay on as a member, these are yours forever, all this material that you get here in this package. So you'll get the benefits of options versus stocks, mastering puts versus calls, option expiration, what that is, how it works, and then it takes you through kind of some beginning option strategies to start with, covered calls and protective puts. And then you'll get bonus special 2. You'll get my option beginners home study package, so a 4-hour course kind of geared and structured for beginning options. So developing a trading plan, basics of options, how they work, monthly expiration, leaps, and then you'll get a follow-up Q&A, my option trading tutorial, 60-page option guide with videos of the Greeks and standard deviation option probabilities, my 15 option strategy guide takes you through what is a back ratio spread or a straddle or strangle. And then my bonus of the Greeks, so you get this printout for your desk on what the Greeks are, and a trial membership to my trading club, which will give you access to our virtual trading room every day during the week, which I'm in there hosting, nobody else, 9:30 to 10:30 back for the close. Daily video updates every night after the market closes, video archive of those, live Q&A every Tuesday, which is also recorded, Educational Vault, 60% discounts on all courses and software. So a lot of great stuff here. Hopefully I'll have you guys and gals sign up and be working with you in the future. So I'm about out of time, but I hope this, gave you some ideas of things that you can do to kind of improve on your trading and reduce your risk and improve your returns. So again, thanks everybody for being here today, and good luck. Good luck with your trading.
This is David H. Smith, for the senior analyst for the Morgan Report, and we are in interesting times for sure. They can be very confusing for investors and all of us really, and so hopefully this will make it less confusing for you, and you can see the possibility for certain sectors of the resource sector which might shine more than others coming forward. And be aware that any action that you take or do not take involves risk. So don't feel if you don't do anything, there's no risk, because there can be risk even in that if your assets deteriorate due to inflation and monetary and political principles. So we're going to focus today on metals, miners, uranium, and the blockchain, which are the areas that I feel have extraordinary potential over the next 2 to 3 years at least. I'm the senior analyst at the Morgan Report with David Morgan, and we offer a newsletter, an annual letter, and also a free weekly letter. Just write to support at themorganreport.com for either one of those pieces of information. Here's the disclaimer that we put at the front of all of our presentations. These are the assumptions that we're going to be working on, that this is not a usual bull market. It's going to be volatile up and down, but on the balance, it's going to be massively higher over the next few years. And would like to see as many of you as possible in that winner's circle. Some people are going to leave too soon, and some are going to stay too long. So we try to find that middle ground where you capture and maintain most of your gains. Planning ahead will help you become more successful than just trying to wing it through the whole thing like the majority of people do, or not even thinking as you're going through it, operating on emotion rather than intellect and planning. These are the two things you cannot afford to lose. You can't afford to lose all of your investable funds so that you can't be a player anymore, and you can't lose your emotional, psychological capital. If you lose number two, you could have 10 million in your account and you'll fritter it all away because you won't be able to deploy it properly. So when you're going to be bold, try to be right. In other words, don't just jump into something emotionally. Everything has really changed because of COVID. It's starting to get back a little bit. I don't know that we'll ever see normal. And that's not just because of COVID. It's because of the paradigm shift that we're going through with the blockchain, with new ways of analyzing stocks, with new ways of looking for and producing gold and silver and uranium. Everything is up to change now. It's a complete paradigm shift. So just embrace the change, even if you can't keep up with all of it, but do your best to stay on the path rather than ignoring what's going on, and don't dismiss things without a little bit of a deep analysis. For example, saying that Bitcoin is a scam or it's going to zero. If you believe that, that's fine, but come up with deeper reasoning than just saying that, because something else is going on that I think that indicates that probably neither one of those very superficial assumptions is going to play out and be correct over time. Something that helps me a lot when I have to offset a position that I want to make sure I don't have too large an amount of, or if I have a leveraged position, I don't want to take a chance on losing too much money. I always remind myself it's important that I make money, not how much I make. So I focus less on how much I'm going to make on a position and more on the fact that I want to be in the green with as many of my decisions as possible. Do not wait for the market to give you the information where everybody else has it, because if you act then, you'll be buying with the herd, and that's the last thing you want to do. There are several free essays that are offered to you by writing to this link. This is just one example. I have one out last week and this week also that has been taken out of some of the writings that I do for Money Metals Exchange and for the Prospector News. And you're welcome to request these for your own reading. There's no charge to you. David Morgan always, and I recommend as well, that you get physical first. So if you're just starting out and you don't have any metal or any stocks, Get some physical first, even though you may have to pay a little bit more for it, go through a reputable dealer. And then after you have that, which is your insurance policy, then your mining stocks, if you have funds left over to have a brokerage account and invest, that's going to be your investment portfolio. You can see the size of the gold mining industry in relationship to all these other entities out there. I mean, just look at the size of Facebook, Amazon, Netflix, and Google compared to the gold mining industry. I mean, there's not even a comparison. They could swallow it. Any one of those companies could swallow the whole industry in one gulp, and you could add silver to that, and it wouldn't be much larger. And look at the debt. This is what's driving so much of the tides of inflation and deflation at the same time. We're looking at stagflation, I believe, like we had in the 1970s. Those of you old enough to remember it and participate in it, I think we're going to see the same thing with even more pronounced consequences. Higher nominal metals prices by far, and perhaps higher interest rates over time. Hard to believe now with them in negative territory, but I think that's where we will end up. Here is the most reliable indicator of future price inflation, and this is the Fed admits this themselves, are agricultural commodities, foodstuffs. And what food is showing us now is that we have very high inflation not too far ahead. In fact, it's already insinuating itself into the economy. Go to the grocery store and see if you agree with me. This is a slide that I left in that I did for primarily Canadian citizens to make them realize that they have a lot of advantages that Americans don't have in their trading. And those of you that are in Canada, just take a glance at this and maybe pick one or two bullets out of it and think about it. You really do have advantages, but you have to know what those advantages are. I would like to teach you a little bit today about how to learn to fish. And one of the ways that I can do that is to have you look at people who have been and done before, like Eric Sprott and Mark O'D of Oxygen. Mark has put in half a dozen companies into production from exploratory stage, and the way he does it is quite unique, and the number of people that he has on his staff with their experience is really amazing. These are people that have done it before, and you can, if you learn how they think, you can become a better trader. Later on, there'll be an essay that you can have along the lines of what I mentioned earlier, the best of breed geos. I think you will really learn a lot from that. I know I did in writing it. Here's the book David and I wrote, David Morgan co-authored, Second Chance. And this is going to give you an opportunity as we get into the bull market further to maintain most of what you earn rather than giving it all back. We have a specific strategy for not overstaying your welcome in the market. And it's the only book that I know of that deals with this. And not only that, but in a way that relates to our human emotions. It doesn't go against the way we operate as human beings. Mizu no kokoro means mind like water. I took this picture of the bay a couple of years ago, and the whole bay and the whole sky is reflected right in the water to the point it almost looks like a painting. But that's where you want to try to be. You want to be very calm when you're making your trading and not react through emotion. We never get rid of emotion, but we want to absolutely control it when we're making buying and selling decisions. Once you make that decision, you've got your plan, you've lined it out in a way that fits you emotionally and financially, then you go ahead and you act on it. A lot of people come up with a great plan, but they don't act on it. A lot of people were going to buy Bitcoin at 3,000, at 500, at 10,000, at 25,000, at 40,000, and now it's 57,000, and they still have not acted. It's getting to the point where it's getting late in the day to do that. And the longer you wait on something you've already decided on, the greater the risk as you finally get to the point where you don't do anything except buy at the top, and that is not a good strategy. That's a very bad one. Here's the demand supply things that the analogy that I use is a subduction zone where the demand for copper, gold, and silver and nickel and other metals is driving underneath the surface of the actual availability, and that creates all sorts of stress and supply stress, and we're going to see that work itself out explosively over the coming years. You can see that the grade has been decreasing, the grams and ounces per ton for the last decade. This chart mirrors what I could show you for gold and copper. So they're working on more ore has to come out of them in order to get the same grade that they did just a few years ago. And that's what's driving exploration, because most of the big discoveries have already been found. There are a few more in the pipeline, a couple of which I'll mention in this report. But the number that we used to find in 1 year, 10, 15, 20 years ago, is much, much more than now. In fact, there have not been any real major discoveries turned into production in recent years compared to what we saw 30 years ago. They're still smaller and they're less frequent than ever before. And this does not augur well for an industry where every ounce they sell means that's one ounce less ounce they'll ever sell unless they can replace it somehow. You can see that in spite of COVID, that in the Asian exchanges, the SGE, that the gold and silver accumulation continues without letup. This is the thing about silver, which really, in many ways, is the most attractive metal out there today to speculate in and invest in. Silver is the only metal. I think I'll have a chart later that'll show you this, so I won't go over it twice. But when silver demand increases, as it has now at the retail level, it's just not possible for the very few primary silver companies to ramp up their silver production very much. And 70% of the silver comes from base metal companies that produce copper and gold and other and base metals. So they don't how much silver they have is contingent upon how many base metals that they produce. Here's the ratio. We could see, if we see $10,000 gold, we could have the same ratio of 40 to 80 that we see right now in silver, and silver could trade for several $100s an ounce. So don't think it's impossible or ridiculous to think that we'll see anything over $50 silver or even $100 silver going forward. I really believe it's possible we'll see a spike to several $100s sometime in the next few years on silver. I know that sounds impossible, but if your picture isn't big enough and it happens, you're going to leave a lot of money on the table. This is what I call $26 to $49 silver as volcanic tremors, like Mount St. Helens did when it was getting ready to erupt. And above $50 is a pyroclastic eruption, which blows the top off of everything, including the price and the availability. Once we have that happen in silver, I think you'll see inflation dollar-wise very rapidly, well beyond that point. It may take a couple times to punch through, or it may go through like a knife through butter, just like it did between $19 and $29 about 5 months ago. Everybody thought it would take months to have that happen, or maybe a couple years, but it simply didn't. And I think that could happen now, where we see $50 silver, and then in a short while we see $75 silver. All you have to do is look at the way Bitcoin behaves and get some kind of a sense of why that could be a very real possibility. Here's a chart I kind of inferred a little bit a while ago. If you look at everything on this chart, the change, the 2021 highs, and how they've been exceeded from the 1980 highs by hundreds of percent. And now look at silver. It doesn't make any sense. It's less than half of where it traded dollar-wise in nominal dollars in 1980. Something is out of kilter here. I would say to you, everyone listening today, not a human being alive, including myself, knows what the real value of silver is or should be. But I believe it's many, many times above what it is now. And that's why where it'll end up, I think, will be absolutely shocking, because there have been factors that have kept it down for so long, it doesn't make any sense. And of all the metals on this board, it's one of the top 3 or 4 that are the most necessary for us in modern society. And yet look what's going on. It just does not compute. Therefore, that gives you an indication of why this is such an asymmetric trade, where a small amount of money could yield amount of potential profit all out of proportion to what you would expect. Here's the gold saucer chart. It's been backing and filling, going down now a little below 1700, but it still has that potential to move forward, and I think eventually we'll see targets well beyond 4,000. Jim, 16,000 gold in by 2025, and I don't think that is at all beyond the realm of possibility. Look what's happened here. This is the visible gold demand on the bottom, But look where the other demand is, where we don't know where it's going, into private vaults, into holes in the ground, into cookie jars in the bathroom. A lot of gold is being taken out of the market and not coming back in. Here's the breakout between the miners in relation to gold. By definition, miners should be more, they should return more because they're riskier than the physical gold, but they have underperformed for the most part for many years. And here you see this massive wedge that shows that underperformance. It has been going on since 2006. So it's been about 15 years, and now look at it. It's breaking out very decisively, which means that the effort you put into finding and investing in quality gold, silver, and uranium and copper plays should reward you more greatly in relationship to that same behavior you might have done over the last 10 years than it did then. So you're going to get a kicker. You're going to get higher metals prices, higher miners prices, and higher miners prices in relationship to gold. Here's another tailwind. You see the gap between the juniors and the seniors? This is abnormal, as you can see on the chart. All the way back to the very beginning of the bull run in 2001, there was a gap like that then, but that gap closed and it stayed relationships stayed pretty close to each other all the way down to about 2014. And then look at that opening, which is still there. So that means that if you have a quality junior that you find and invest in, it will return more for you on a percentage basis than a senior will. And that will keep happening until this relationship gap gets closer together or closes. You can see the ratio here played out a different way. Look how far out of kilter that is. It's really, anybody that really understands investing and risk reward will salivate at looking at this chart, because they never had that opportunity since 1983 through 2008. They didn't have the opportunity that you have today, with a modest amount of money and taking your time to do the research, making a plan and executing that plan in a calm manner. Look how long this relationship has been out of kilter. The longer that something is out of kilter and the farther it goes in the wrong direction in relationship to where it normally is, the more violent will be the reaction, and the more powerful and the overshoot that will take place becomes even more so as time goes on. Here's another way to show it. You can see it still out of kilter. This is where we are by that little yellow circle, and where we're likely to go based upon previous gold and silver bull markets. And Marina did an excellent job on this chart. So if you think it's too late to get in, you are sadly mistaken. Get your planning going, get your coins lined up, get a plan, subscribe to the Morgan Report, do other research, get on YouTube a lot and listen to people, and you just might surprise yourself at how much you can tuck away over the next few years with all the stuff that's going on with mismanaged investment by central banks around the world, and massive monetary printing, and disruptive political scene and the social scene, and food prices, going out of kilter. What more can you ask for the potential for what could become the biggest metals bull market in our lifetimes, even if you're 80 years old? I profile a couple of companies here. I have shares in this company. I wrote part of the back cover, which was an honor for Bob Moyarty, and I was attributed to it on the back cover. It's a wonderful book, Inside the Greatest Gold Discovery in History. And I think time will prove that this is not an exaggeration. It really has that potential, because it has the size and the potential and the relationship to what waters ran in Africa, which is, this part is in Australia, which was connected when there was just one continent, millions of years ago. And it's the same type of setup for where the gold is being found there now in Western Australia. This is a 400-ounce doré bar that's first pour from a few weeks ago from the mine there for Novo Resources that was poured in Western Australia. The first of many, many, many doré bars, in my view. Here's the palladium chart. It shows what happens if you think prices can't go any higher from a certain level. Nobody had ever seen palladium above $1,100, and it dipped a little bit, and then all of a sudden it went up to almost 3,000, and today it's trading at almost 2,400 a couple of years ago. You could have held on with part of your position, and you could have taken 2 years to get out of it. But if your picture wasn't big enough and you couldn't imagine palladium above, 1,200, you're out of the market and you missed a $2,000 move. Don't let that happen to you with silver. Don't hold on to all of it, but don't get rid of all of it until you really are certain that your picture has been big enough and realized by Mr. Market, and then consider it. But be careful about getting out too soon with everything you have. The same applies to certain mining stocks. Here's a picture of David Morgan and myself in Argentina, and looking at some greenfield research. And David, this is important. David has done a lot of research on this. He indicates that as much as 90% of the profit potential of the entire bull run comes in the last 10% in time of the move. So when you think the move is about over in a few years, remember that that final blow off probably hasn't happened yet, and the last 6 to 9 months could return more for you than the last 15 years did. It has that kind of potential. So be careful about jumping out with everything too soon. And here we go. This statement, I think, is something you should really, really not forget. 6 to 9 months at the end is where that blow off really happens. It happened in the 2000 market tech wreck as well. This is important. You learn to sell when others are buying, which is right now, and actually which was really a few days ago for sure. And then do the reverse. When everybody wants to own something, maybe you should sell some of it. Maybe you should sell all of it if you feel that this particular stock has gone way too far. But that's your decision. And then you also ask yourself, if I'm buying another company, is it going to give me Pareto principal return where 20% of my portfolio gives me 80%? Or is it going to be just an also ran? And maybe if you look at it that way, if you don't think it has that much potential, why buy it? Why buy it for a 10% return risking 100% loss? Here's the one I referred to a while ago. I wrote this essay, kind of proud of it. 4 best of breed mining geologists. I know all these people. And, I could have added a couple more in here, but 6 or 7 is a lot to talk about when you can only write about 1,100 words, that much space. These are 4 really great individuals. They've done it before. They're doing it again. Don't just buy something because they bought it or they're associated with the project. Consider their thinking process that caused them to get involved, and then ask yourself, how can I think like them? How can I be more successful? If you learn to think the way they do and look at things from their perspective, that's a guarantee I can give you. You will become more successful if you act upon that knowledge in a way that kind of correlates with what you're about. I started out with the uranium as a secondary focus. I still see it that way, although I wrote this essay about a year ago for the Morgan Report. We've done very well. We put 2 of the about 50 stocks in the uranium sector that turned out to be the biggest performers. I think both of them are up around 400% in the last year. We're in a correction right now. I'm thinking from the research I've done in the last few months that I was not bullish enough on uranium because of some things that have changed, not least of which the state of Texas kind of froze itself with a lot of people. Some people actually froze to death. And they found out that windmills don't work when they're frozen, and they don't work when the wind's not blowing. And solar cells don't work to get energy from the sun when they're covered with snow, as Germany found. Germany had 30,000 windmills that wouldn't work because there was no wind. So it's, these things are helpful to get energy, but they can't replace other forms of energy. We're trying to replace fossil fuel. Well, that's good to do, but uranium offers a solution to that is a lot more green, a lot safer now, and a lot more reliable than it ever was. And more people in the green movement are coming to see that is a potential solution for much of our energy problems, and that we'll never, ever solve all of it by building windmills that cover the face of the earth. Here you can see the uranium spot market bottoming slowly and slightly, but it shows you that unless there's another Fukushima, we're not going to see those lower price levels anytime soon, and who knows how high it'll go. My guess is someplace between $90 and $110. But what's going on now, you know, the way other things shoot up beyond what we thought, like palladium, who knows? So you've got to be willing to accept just about anything. But if you can get on board this first big leg when it finally gets underway, you will likely make asymmetric profits. You can see the relationship here for nuclear and how it produces as much energy as coal or oil or natural gas. Just one little pellet. This is a item that is used, well, it's not just used by Encore Energy, but I'm kind of profiling them there. This is in our portfolio. I own shares in it. Group Technologies, Group 11, is a privately held firm that has the same people in it, some of the same people that are also in management at Encore Energy and EnviroLeach Technologies. EnviroLeach is going to change its name very soon, and I'm going to keep you in suspense of what it'll be, but I'm telling you, I love the name change, and I love the new symbol, and I don't want to let the cat out of the bag before it happens. I know what it is, but I think it's great. I think it's going to help the company get their word out to a lot more people on the visual respect, because they do have something with their ability to do in situ recovery of gold and silver and uranium, and also their e-waste, which they're a leader in for taking all sorts of computer boards and TVs and everything else and grinding them up and getting the metals out in a way that is absolutely leaves almost no footprint, as opposed to burning them or burying them, which is what over 80% of all the e-waste is done nowadays. Group 11 Technologies is going to be doing pathfinding research to help these processes become even better. And the people that are associated with this privately held company are top-notch. This is what happened about a month ago in Bitcoin, 58,000. It sure looks like we're going to see a higher number than that pretty soon, the way things are going. It dropped to 42,000, 43,000 about a month ago, and now it's all the way back up, I think, to 56 again. So where this thing ends, nobody knows. I've seen some pretty amazing figures. It's kind of getting late to get involved if you haven't already. But, you know, we have a couple of miners, Bitcoin miners and Ethereum miners that we have profiled in the Morgan report. One of them that we recommended just a few months ago has gone up about 500 or 600% because they mine Bitcoin, and they're very closely tied to the price of Bitcoin. When Bitcoin goes up, their share price tends to go up. So you don't have to buy Bitcoin to make money in the crypto sector. It's called buying picks and shovels. You know, it's the technology and the hardware that is used to create the Bitcoin, which is digitally mined. At the same time, we've got a run on gold and silver, not just in the United States, but in Canada and Europe as well, too, with premiums that are much, much higher than anyone thought would be possible. Who would have thought that the American Silver Eagles, which normally are about $3 over a coin, are now 10 to 12 if you can find them. Here is the change in view. I mentioned to you at the beginning that everything is changing. The blockchain is going to enable people that have never been able to have bank accounts before and save money to do so in a way that is very productive. And with gold and silver being backed in a particular project that David Morgan and I are associated with and have invested in, we think this is one of the best ways we've seen in order to do this out of the 75 or 80 other projects that have tried to do some form of what is now being done in this project. This project is called LODE, L-O-D-E, refers to the mother lode of a mining project. And now we have two digital coins, AGX coins and AUX coins, each backed by an amount of silver and gold respectively. Now they can be, you can buy many things with them. They're going to become tradable before too long. There are people in over 100 countries that have invested in putting money in physical silver and physical gold into these coins. And these coins are backed by the silver mass for the load AUX is backed by the load tokens. And those tokens are held for the long term. They pay out micro rewards as more AGX coins are sold. And they've even floated a bond here, which I participated in last fall, which pays 9% interest to loan out money in the bond form. So pretty exciting times. These are cryptographic coins. You can store the gold at different places in the world. You can sell your coins to get the silver. You can add more. You can use it if you believe in, as I do, in the much higher prices for gold and silver, which causes the coins to become more valuable. And it really is changing what we understand. It's another form of decentralized finance, DeFi for short. That DeFi is changing the whole world, the way we do finance. And I should have, but didn't get a chance. I've been remiss on this in putting a slide for BlockFi financial services on my presentation. It will be on the one I do next month. I opened an account with them last May and talked, to try it out before I wrote about it in the Morgan report. And I'm very pleased with what they do. You send in your native currency, which they turn into the stable coin on a one-to-one basis. You can either hold that and get interest up to 6 or 7%, and it can be paid to you in Bitcoin if you want. Or you can buy Bitcoin with it, or Ethereum, or a couple of other choices that they have. I think a Litecoin is another one. And it's really, really a powerful investment model, backed by some of the biggest players in the business. So the Load project for me is just a very fascinating thing to be a part of and to talk to others about it, as is BlockFi. So the Load project is digital, private, high-speed, peer-to-peer, silver and gold money for everyone. The blockchain gold and silver miners, it's the first time that all this has come together, not just in one country even, but around the world. So people are acting upon this simultaneously for their own methodologies and their own desires and needs, and it's going to get bigger and bigger, and the runs on the underlying metals are going to be compressed. Instead of taking 5 or 10 years to have massive upside, it could be months or maybe a year or two, for this to happen. And when you think about it, what's in your pocket is not really money. It's currency. It's fiat paper money. Somebody else has a claim on that, the government. And they come right out and say, we want to devalue it. They don't say it that way. They say, we want to cause inflation to stimulate the economy. Well, inflation is a devaluation of the fiat paper in your pocket. So when you take that fiat paper and you buy gold and silver, or you buy gold and silver and you send it in or have it sent in to be turned into digital coins like AUX and AGX, you're not buying something like a car or a boat. You're exchanging an inferior form of currency that people call money for what's been honest money for thousands of years. And I believe, and it's not a big deal right now, and it can't be calculated, but I believe that third tailwind factor that's going to drive gold and silver to moonshot levels, along with the mining shares, because they produce this stuff, is going to be the unexpected demand factor by people buying digital coin, with metal-backed coins on the blockchain, because in addition to the fact that they like the value proposition, but in addition that many of them aren't going to be able to find physical silver to do, and they'll decide that buying a digital coin, which is backed by physical gold and silver, makes a lot of sense to them. And not only that, it's also highly competitive. So read George Gilder's book, Life After Google. He thinks a decade ahead of everybody else, and he's in his 80s now, I think, but he's still pulling it off. He's still thinking ahead of other people. And that book is a little bit slow to get through sometimes. He's pretty technical, and he's a deeper thinker than you and I are. But if you stick with it, it'll be worth your time to do that. I suggest a couple things here. Banking on Bitcoin is a YouTube special that will teach you a lot. And anything that Raoul Paul does, he interviews all the top people. The Michael Saylor of MicroStrategies was the person that really kicked off institutional investment in Bitcoin when he turned most of his treasury into Bitcoin. Bought some more, I think, around 40,000 Bitcoin. So he didn't just buy it a couple of years ago at super low prices and now is promoting it. And he's a real believer in it. So he's just one of several people. Andreas Andropoulos has been a long time exponent of the BlockFi, or not BlockFi, of the blockchain concept and of Bitcoin. And these people are real thinkers. And, look at Ethereum and look at the people behind that. It's just a fascinating time to be alive. Yeah, it's risky, but if you don't do anything, it's even more risky. And if you're not going to get involved in Bitcoin and Ethereum, that's fine, but at least learn about it because it's going to change your life whether you want it to or not. And it's going to change banking. It's going to be better for all of us. I just closed on a house mortgage yesterday. It cost me thousands of dollars. It took weeks to get done. It was very complicated. I signed all sorts of documents. In a couple of years, instead of costing you thousands of dollars for a mortgage, it's going to be a few hundred, and it might be executed in a few hours. That's the promise that blockchain gives you, and it'll be immutably on there, and nobody can change the information. So pay attention. This is the most beautiful picture of a copper deposit I've ever seen. Only 20% of the world's copper has this kind of a makeup and grade, geologically speaking. It's so relatively pure that you don't even need to send it to a smelter. You can produce it into copper plate in situ. This is in Ecuador. This is a 22-kilometer strike. It's a ways from being turned into production, but it's going to be a big deal, I believe. David Morgan has an annual letter. He also has, for high net worth investors, he has a mastermind program, which is about 5 times as expensive as the letter. It's for people that get involved in private placements and things like this. He also has a free weekly letter, and we find that a lot of people that start out on the free weekly letter go on to take his report. I am a contributor to the report just about every month. I have, in addition to talking about gold and silver and uranium and copper stocks, we've introduced trading programs for those which have turned out to be very successful for our subscribers. I have a column I do every month called Blockchain Brief and keep you up to date on changes. And they're happening so quickly and so massively across the board. I've been following this stuff for 4 or 5 years, and I'm stunned at how fast things are changing, even as I do the research and learn about it myself. So I think you'll find it to be very fascinating. And David Morgan is up to speed on all this stuff. So he's got, some days he does 6 or 7 interviews. So he's all over the place doing that. I do a few myself, but he's the lead horse in this place. And you will learn a lot by listening to what he has to say. And he gives updates to subscribers, video updates. And it's a learning experience. Learning how he thinks will help you to become a better investor and speculator and trader. And you can get involved with this right now from your mobile phone. Just use this information and get hooked up. I think you'll like it. He has well over 50,000 people that subscribe to his free letter and read it every week and listen to him, because it isn't printed out, but it's he does it online. So I think you'll like it. You don't have to hold all the way at the top, and you don't have to buy at the bottom. I know an individual who did this. He bought silver at $11 and sold it at $18, and he made millions. He tore up and burned his charts because they weren't operating the way he wanted. And I didn't talk to him too much afterward, but I don't think he was upset that it went to 50. And you know what? He didn't give up a penny of his earnings. And I know people, myself included, who held on to 50 and ended up giving a bunch of it away when it dropped to 1080. So, be careful how long you stay in there. And I think Second Chance will help you to avoid the fate of so many people in the last bull market, and which will be the same fate this time around. So, take a look at the book, pick it up, and I think you'll really like it. And if you have a question or something, write to me about it at support@themorganreport, and I'll be happy to answer a few questions for you on that. Here's the learning curve, the 321 memory law. If you don't do anything with what you heard today, write some notes down, consider about doing some research, maybe make a couple of trading decisions. Within a few days, most of it will have gone right out of your brain. You will have forgotten it, about 50, 60% in just the first few days. And then they get down to the bottom here, and you will have forgotten about 93% of it. So this is the same with any conference you go to, whether it's virtual or face-to-face. So please just do something to retain the things that you think are important. If you saw a company I profiled here and you like it, get on the internet, click the URL, go to the company, read what they have to say, call the IR, look at where it's trading on the charts. Do something that helps you build that information into your system. You may not like it, but at least you've got a new skill that you're working on. But don't just go watch TV and let everything go away. And the same thing when you listen to something on YouTube. I'm listening to people talk on YouTube all the time, and I'm taking notes all the time, and I'm applying a lot of what I hear all the time. And so I get better because I do this. If I didn't do that, I'd forget most of it, and it would just be kind of almost like leisure time, wasting your time doing that way. So please try to retain as much as you can. And when you get your plan, execute on the plan. Don't just sit there. Don't say, I wish I had done that, for whatever reason it is, because you're afraid or whatever. If the plan looks like it works and it makes sense to you, why not do something about it? You don't have to go all in. You don't have to get a housing mortgage and turn it into gold and silver, but do something. At least get some hold in your hand metal. It will make you smile when you hold a small gold coin in your hand, when you rub your thumb and forefinger over a silver coin, a bullion coin or a silver bar. You will smile. The people around you will smile because you will have the same feeling that people have had for thousands of years, that you're holding honest money in your hand. Thank you so very much. I appreciate your time, and I believe that I may have a few minutes for Q&A afterward. I'll be happy to interact with people. Is that correct, Donna?
Absolutely.
If
David,
you'd
do you
like,
see
I can close out my presentation so I can see your screen, correct?
Not really. You can go to the chat box, questions box, sorry, and see the questions. Somebody else can please put David's crypto YouTube link into the chat box.
Okay, I've got attendees here, and let me see where I can find the questions. Do you want to read the questions to me, or can I see them, or what?
You can see them, or I can read them for you, up to you.
Okay,
What
why don't you
about
do that if you don't mind? I think you did that last time. That worked well. Now, let me ask you this. I can go full screen again with my first slide if you want. Is my desktop screen distracting from what you see?
Not really. That's okay. Okay.
I'll go back to that first.
Laurel asking, what about rhodium and platinum?
What was that again, please?
What about rhodium and platinum?
I'm sorry, I didn't understand that last term.
Platinum.
Oh, platinum. Yes, platinum is an interesting play. I think it could go a lot higher, but the story of platinum, I think it's going to be used less, with catalytic converters being less of a problem, for people to solve in internal combustion engines and in diesel engines. So it probably has a bright future, but I think silver on a percentage basis has a much greater future and less downside. That's just my personal opinion. But I'm not saying don't buy any, but I'm suggesting don't overweight in it.
Maybe have the link for a crypto YouTube, David's crypto YouTube.
We don't have a crypto YouTube. The column I write is for paid subscribers to the Morgan Report, called Blockchain Brief. But if you go to YouTube, you can just Google anybody you want. You can Google Bitcoin. You can Google Michael Saylor. You can Google Andre Andropoulos. Bitcoin. I'm trying to think of the individual. He invented Ethereum before he was old enough to drive. Uh, I'm sorry. It's an unusual name, and I know it. I just can't think of it right now. When I can, I'll mention it. But anyway, there's a lot of different people that are very knowledgeable. Max Wright does a free tutorial out of Australia. You'll find people that you like, uh, that kind of seem to fit with you better. There's another one. There's two or three different people that whose name escape me right now, but you'll find people that you really like. And what I like to do, Anna, is when I'm listening, let's say I'm listening to Michael Saylor, or I'm listening to Rick Rule, or I'm listening to one of David Morgan's talks. I'm looking on the right-hand side of my screen where you can scroll down and see a couple dozen other presentations, and I'll find one that I think, hey, I'd like to listen to that. And when I get done listening to the one I'm currently at, I'll go over there and click on that. So a lot of times you don't have to keep Googling. You get on there and they'll put other things that they think you might be interested in, they meaning YouTube, and then you can find one to click on, and then you'll get over there and do the same thing, and you'll be all over the place. So that's one way to not take a lot of time clicking, having to punch in people's names. Just get started on one, and you'll find the others showing up.
Thank you so much, David, for the great presentation. We don't
You're
have
welcome.
any more questions on the way, so
It's
thank you.
been a pleasure to be speaking to people today. And again, if they have any, they want any of the reports, you can go to the link that I sent for that, and they're free. And then get on David Morgan's free letter, and I think they'll be very pleased.
Thanks, everybody. Thanks for your time. It's been a very, very busy week. Just before I got into this webinar, I called a trade long on USD CAD and short on the CAD. They go opposite. Let me just explain, and this will be part of the presentation for you to understand the methodology. Here's your CAD, USD CAD. I called it long just now, and it's right here. If you look at my currencies, right here, it's just now about, what time is it? 12:49. So 10 minutes ago, no, 12:49. Yeah, 12:49. About 20, 30 minutes ago, I called it, and I just followed it up with the stop loss and everything information. So we called the long on USD CAD, which is a currency pair, and at the same time futures side, which is Canadian dollar short, and I called it right from the line right here. Okay, both of them are in a slight profit. We're looking at first target 40 ticks or so, and then we're moving. But the idea is, I will show you why I called it, is because I had something called confirmation, which we will talk about it today. Look at this magenta line at the bottom. This is market movers line or heavy volume that I watch and I share with my members alongside with the rest of the stuff. So that was the idea of the call. I had multiple calls today on nat gas. I had a call from yesterday on the gold and on the euro. Same idea. All of them into the profit. Some of them will make more than others. But the idea today will be your psychology versus my accurate trade calls. Now, in my website, if you look at my website, you will notice that we say 1,000 ticks a month, profitable, consistent, the TTI way. Now, some of you will think this is exaggeration, but that's for you to know and realize after you get in a trial. We offer a full no obligation trial. So you come in for 2 weeks with us and see what we do and follow the trade calls that I call. We have 3 days live in the room, and we have almost 24 hours on Telegram, which I will show you. The Telegram has indices, has currencies, metals, oil and gas, and Bitcoin. Bitcoin I don't do much, but that's not I don't like it, but I keep it there for information. And I have a specific channel for elite members. These are the elite members. They share ideas, we chat, sometimes they joke, but it's part of what you get as well. All right, that being said, I noticed especially the newer members. I would call, let's say, 5 consecutive winning trades, for example. And some of the newer members, they will not take the calls because they don't suit their trading style. Although this new student came to me because his style that he's been trading is not sufficient enough, and he didn't take 5 consecutive calls. And after 5 calls, he says, Simon is right. He's making amazing trade calls. Let me take the 6th one. The 6th one, it's a small stop. Now all of a sudden we have a problem because now he did not take 5 trade calls. He took the losing trade. It happens every time. 80% of my trade calls are accurate, and I choose not because anything, just because I am very, very selective. And I will explain why. Why am I selective? For you to understand why this high percentage, I'll go back into how I started my trading. When I started back in 2001 with Forex, but switched to futures. In 2005, folks, I spent 6 months studying this here, which is the bid and ask ladder, the price action. From that price action, I learned a lot. I broke some codes. I learned a lot. My background is physics, so I loved numbers. I loved math, etc. I developed end of buying, end of selling, a specific indicator. I used to call it the price magnet indicator, which I developed later on to the SAL indicator, which you saw just now, the magenta line. End of buying, end of selling, finished, unfinished business, or we call them opening, capping, traps, point of controls, etc. So many things to understand, to learn. And these are some pictures back in the days, 2005, 2004, 2006, locally here in Ontario. This is in Colorado, Denver, 2012. And this is in Vegas, I think in 2013 or so. I had fun, but since 2010, most of my most of my business is done online. So I don't do seminars anymore. It's all done online. But if I get invited to an occasion like this, I would do it. I like to do it. I enjoy it. There is this thing here, a quick testimony from a member that joined me in 2014, and he rejoined now. Because what we offer is a lifetime, or not, I would say a permanent membership, so it does not expire. He says, I've been trading for nearly 25 years. Most of my career was in Forex. I was able to make enough income to quit my job and trade for a living. Then the subprime crisis happened in 2008. We all know about that. Completely erased all the capitals, and I had to that I accumulated. Then I had to start with day trading and focused on futures. He said I tried several moderators and rooms, he purchased multiple indicators, etc. Nothing worked until he discovered Simon's room. Since 2014, and he's been consistent, producing 1,000 ticks each month. And believe me, when I say 1,000 ticks, I've been very, very at the low end. Some months we had 4,000 ticks because I do swing trading and I don't focus on 1 or 2 instruments. I look at 15 to 20 different instruments between Forex and futures, mostly futures though. He uses a reasonable stop, and you will realize throughout the presentation that when I call a trade, first thing I focus on is my stop loss. My stop loss is very important, and it stems exactly from the volume that I'm looking at. Nothing is random from what I do. And you can easily follow his signals on Telegram, etc. So just to let you know that I have students. A student just joined me after 15 years of purchasing my program. He was active. He got busy. He started a business, I think in the auto industry, overseas, importing cars, whatever. But then now he's back to trading, and he contacted me and he joined. So the membership does not expire. I offer, of course, I will educate you. Just give me a second. I have to show you first what we offer, and I will educate you on what we do. We offer a full education. If you look at the members, this is the members area. This is the back office. Once you become a member, you will receive the monthly room links, which is 3 days a week, and then lessons, all of them videoed. For example, level 3, it's detailed education about the volume profile and how it's called crash course on volume profile. So this is part of what you receive. You also receive a live trade room for 3 days a week, proprietary indicators that I designed them throughout the years. We have, I think, 4 or 5, but I focus on 3 of them. 2 are major. I cannot even function without them. My members cannot function without them, and I'll explain them soon. Trade signals, as you saw on Telegram, we have different channels that you can enjoy. Okay. Now, for you to understand why is this unique, first of all, once you join us in a trial, you will understand that when I make a trade call, I will focus on the entry, on the stop loss is very important, and then target one, and then you will realize there's no random stop loss. Every stop loss that I call is going to be a smart stop loss. I focus on anticipating the market move, and then confirmation and execution. Now, for you, it sounds like it's like just a word: anticipate, confirm, execute. I made it simple because the abbreviation is ACE, ACE each trade. But really, the ACE was not my intention. It's just anticipate, confirm, execute. There's no other words for them. I have to anticipate the market's move ahead of time, and I have to confirm, and then I have to execute. Let me be more specific. Let's go to the charts, and let me show you gold. Okay. Previous presenter was very specific about metals, gold. So let me show you about gold. This is the gold, and gold, we've been looking at shorting the gold for a long time. And I had a level right at the area here for a long time. And then the gold came down to this level. It was anticipated. Now, what is my next move? Once we get the anticipation, my next move is to wait for the confirmation. Look at the gold. Let me go to the weekly. It's better. This is the volume profile on the weekly gold, and look at how the gold was trying to escape this heavy volume area just for it to stop at the bottom of it and then bounce back up. Meanwhile, if you look at the confirmation on the daily chart, look at the market movers or market makers intention. They just popped in the heaviest volume in the market right there. This is the confirmation that I had. Okay. To understand volume profile, I will choose, let's say, same thing. Let's stay with the gold. This is gold futures, and this is the volume on the right-hand side. You see the volume profile. Look how the volume on the right-hand side, I can sharpen the edges. I can smoothen the edges. Okay. It's designed for Sierra charts. It's designed for us. Look how I can minimize it, maximize it, and look how every single level has a specific code, specific color. If I go to the studies, if I look at volume profile, where is the volume profile? Every color has a percentage of the volume that's specifically color coded. You see, 90% is orange, 100% is red. The lowest percentage is gray. We call these areas suction tubes. But let's say I'm looking at this much data from here to here. You see the volume profile associated with it is not that much. It's only covers this much of data. But usually I look at full data so I can get more strength. Okay. One of the examples, I'm telling you, this morning I had a line sitting right here on gold. and I called a long on gold, and it did go up nicely. Actually, it came twice to it, and I called it twice long. Okay? So anticipate, confirm, execute. If I go to explain to you, this volume profile has levels. And pay attention to what I'm saying next, because I'm going to explain it in kind of a diagram thing. This volume profile, it's constructed in a way that you can see a few things. You can see continuation zones, for example, see continuation. You can see zones that are rejection, something like this. Okay, again, you have to get the detailed education for you to learn exactly, but I'm giving you some simple examples. And you have continuation zones, another continuation zone, followed by another continuation zone. So basically, this volume profile is continuation zones, and then we have rejection zones, followed by another continuation zone, followed by another rejection zone. Now, this continuation zone could be, it doesn't have to be heavy volume. It could be low volume, but it's continuation, which means from the word continuation of the price get into it, it has a chance to continue. A good example, today I told one of the members, a new trial member, who she was long on the gold. I said, if you're long on the gold, please exit, because whatever you have below you is not going to hold the stop loss. It's going to come back down, because you are inside a continuation zone. You're going against the logic. Sure enough, we saw the market coming down to her entry level, but she was out of it anyway, out of the trade with profit, which was good. Going back to how I trade and explaining in a little bit of a slower pace, what do I mean by continuation, what do I mean by rejection, and how I trade it, and how I confirm. Remember, we're looking at anticipation. Now, so many of us trade pure technical analysis. Let's assume you are one of them and you're trading just technical analysis, and you have one level here, one level here, and one level here, and you're looking, the market is coming down, so you're looking for, sorry, not this, you're looking for you're looking for a downtrend, you're looking for a short. So you are looking for a short, you are using you are using just technical analysis, nothing else. You would say, I'm going to short the market once it gets to this level. I was taught to use 30 tick stop loss. The market comes here, you click short, the market goes against you, takes you out. He says, no problem, relax, I'm going to get the next level, because it's proved itself before. So it comes back again here, you click short again, you get stopped out twice now, 2 stop outs. It gets here, it started coming down. You say, no, it's going to come back down. It's going to come back down. So as soon as it comes back down here, you chase it with a short, only for you to see it going back up, and stops you again. Now the market, you don't like to trade it anymore, because you get stopped out twice. That is very typical of anybody who trades technical analysis. It's a hit or miss, 50-50. Okay, usually it's 50-50. Now let me show you how I look at it once I realize the volume profile, and once I understand volume profile. I'll show you how I look at it from my perspective. Same idea. I'm looking for a short, but now I have, because of the volume profile I showed you, I have levels. I have a continuation zone that comes all the way up here that I can't touch. And there's another continuation zone all the way here. Let me just mute the channel, folks, on my Telegram, because students are chatting and it gives me an audio. Just give me a quick second, please. Got it. All right, so now the way I look at it, we have a continuation zone right here. Pay attention, this is continuation. So mostly if the market goes into it, it will mostly continue, such as this one. See how it came back down? See how it came back down from here? And I'm sorry, not this one. But forget it. From here all the way down here with continuation, it's going to go mostly go up. Now it came up here. Do you think if I have a Fibonacci level here, I will trade it short? No. No, because first of all, I don't know where my stop loss is. I am dealing with the continuation zone that will inhale this trade. It could come back down randomly, but logically I will not touch it. All right. Now it goes up, I leave it alone. It goes up here. This is my second good level. Am I going to trade it? No. No, even if it goes in my favor, I'm not going to trade it. Why? Because look, it's a continuation zone. I am playing with fire. My stop loss is exposed. I'll tell you why my stop loss is exposed. Because my stop loss is sitting right here. This is the rejection zone, right? This is rejection. So my stop loss is sitting right above the rejection zone by a fraction. Do you understand? Because if this area is taken, if this price, this probably another stop loss that you have without paying attention to the volume, this will be taken too. So why am I doing that? Why am I trading knowing the stop loss is all the way here? I'll wait for the market to come here, and this area is going to be my entry. Look at how small my stop loss is. Okay, very small stop, very small stop, and this is where logically the short should start, eliminating that huge risk. And once we get into this here, we are in the profit. So once we are in the profit, folks, we have target one. First, usually my trade calls are based on 3 contracts. Target one is 2/3 out. So if I'm taking 2 contracts out at 25 ticks, I'm making 50 ticks because 2 times 25, I'm making 50 ticks. So I already have 50 ticks in my pocket. My stop loss could be 20 ticks, 30 ticks risk. The runner could be stopped out. I'm still making profit. And that's one of the things that you will see me doing. What you're going to do after you learn the methodology is up to you. Everybody's different. Everybody's account size is different. Mentality is different. As long as you learn how to treat this. Now, 99% of you will be very happy just to know where the rejection zone and the continuation zone is so they can take safer trades. For me, that is only the anticipation part. I have not even confirmed yet, so I'm not even trading yet at this time. I'm waiting for confirmation, C. I have an indicator that I call SAL indicator, Simon's attraction levels. It's very similar to, if anybody familiar with Jigsaw, but simplified in a way you can see the volume inside the market. Volume inside the market, you see it to the tick. It will give you that volume. It will give you that area of attraction. For example, I have the crude short, sorry, the Canadian short, and my first target, look at this attraction level, this magenta line. This is part of the, if I go tools, arrow, this area is my first target. And that will give me about 25 ticks, maybe more on the first target, which will ensure my stop loss. Even if the runner gets stopped out, I'm good. So what is confirmation? Let me show you the Canadian, for example. Look at these magenta lines. These are heavy volumes that the market makers or the market movers have put into the market. My indicator picks them up. If I go to studies, I go to attraction levels, I have 15 of them. I have 15. And the thickness is 5 and the color is magenta. You can change the color. You can go up to 50 levels. If you are a scalper, you can go up to 50 levels and you can scalp every single level. Of course, once you learn how to use it properly. Okay? So going back to the presentation, or sorry, to the diagram, once we get to this level, I'll go back. Once I get to this level right here, I know my stop loss already is here. This is my smart stop. I call it smart stop. What am I waiting for? I'm waiting for confirmation. Now, I would have confirmation already sitting there, right? Or I would have the SAL indicator popping, bringing confirmation to me. I will put them in red, for example, and I will have the SAL indicator shooting those lines here, seeing them popping in. Or sometimes initially, I have a big level of confirmation already sitting here, all right? Sitting here for probably an hour, a minute, 10 minutes, 2 days. It's there already. So this is a win-win combination usually. Of course, here's why I told you earlier, my trade calls are about 80% accurate, meaning 80% of my calls, if I call 10 trades, 8 of them most likely will give you at least first target, which means profitable. Every now and then we crush it with a big runner. So, for example, I just closed a gold 500 tick runner. Where is it today? Gold passed 400 ticks. This is for my students, and we share this. This is 117 students I have here. So gold is up 500 ticks runner, and we have some resistance exiting now. You see, this is last night. I exited 500 tick runner. Okay, this happened last night. So sometimes we crash those with big runners, and that's why getting 1,000 ticks is really not hard. You're getting runners for 500, 400 ticks, 600 ticks. It's not hard. It takes stamina, it takes teaching, it takes learning, it takes assurances, but you can do it. And the gold was basically, the trade call on gold was all the way. This is gold, and I called it. If you look at the weekly, I showed you. I called it from the bottom. And if I look at the day, I called it from the bottom, look at the arrow at the bottom, and we exited right at the top, 500 ticks. And if you look at the gold Forex, look at the assurance that I got right there. Same thing with the Canadian dollar. Just now, I called it. Just now, like before I got into this presentation, USD CAD, look at the call I made, and we are going about almost halfway to target one. Okay? So going back to this, so once we get into this trade, we take target one. I said 2/3, 2 contracts out on T1. T1 is 2 contracts out. The rest is execution. The rest is how to manage the trade. So if I took 20 ticks on T1, I got 40 ticks. Why? Because I got out the first 2 out, 2 contracts out. So I got 40 ticks. Now I have 40 ticks in my pocket. My advice, if you have 40 ticks in your pocket and you're risking 20 ticks on the runner, that's a free runner. You don't have to worry about it, because what I'm giving you a bigger move. I don't like to trade small trades, because by the time I type these small trades, usually by the time I type them here, usually the trade is gone, right? So I look for swings. So you got 40 ticks, you're risking 20 ticks, let it go. It might shake you out, might make you, if you're a beginner, it might go up, hesitate, but if most likely it will continue in your favor nicely. Okay? So, and then here's the thing. We don't have to keep the stop loss here. And I don't move the stop loss randomly, never. Within this continuation zone, once we go in, within this continuation zone, I always find small levels of many continuation and rejections constructed together in a way they give me so I break it down into smaller charts. Then what I do, I move my stop loss according to the next smart stop. We always call it a smart stop. Smart, okay, stop. And I hide my stops behind the volume, heavy volume areas where the market does not break it. Okay, so far so good. I hope I explained it in a way that makes sense. I have 15 minutes, not bad. So let's go back and look at silver. And by the way, when I tell you I made a trade call on silver or on gold or on CAD or anything, it's right here. It's right here. You have the time of the day, the minute, and you have the day itself. And this is posted and students have seen it live as it comes. Okay? Oil. Look at this. Nat gas. We called it long twice. This is oil. This is nat gas. You see, this is nat gas. I'm looking at this target. We stopped here and reversed now, but I was looking for this target. If you notice my trade calls, first thing I do is I focus on the stop. Oil, I looked at 66 target here. This is oil. No, this is not gas. Oil. First of all, look where oil was. This oil was at 65 and change. I said oil is going to be long around 63.6, 63.5. Look at it. The next day, look what we got. You see this? I called it long, and I'm looking at 66 target. I kept saying I'm looking at 66 target. I called it long twice. Both times gave us over 100 tick runners. We made some profit, and the stop loss was taken because it backstopped us completely. We had oil news yesterday. Backstopped us, yes, yet we made some profit. It was not a loss at all. It was nice profit, but I was looking for a huge profit. And look, my target was 66. Look what we got. Look where it touched today, just now. This is a live chart. 66 and bounced down, right? 66 and bounced down. And these are some students talking about the trades, the Canadian, whatever that they follow. Okay. So that being said, that was a very nice level that I was able to catch. So how do we trade? I explained. How many contracts? I explained. How do we manage the trades? I explained. The idea behind this webinar is so many calls will not make sense to you because maybe you never traded the Japanese yen. Meanwhile, it's an instrument. It makes money if you trade it properly. It's like the gold. It's like the Nasdaq. My focus is usually on the indices, the Nasdaq, the Russell, the S&P, the Dow. But when they don't move properly, when they are completely crappy, what do I do? I'm not going to sit down and wait for them or take stupid trades. Look, I would look at Japanese yen. I would look at the Aussie. With the Aussie, by the way, it was a huge miss. I missed the long from the bottom. You see this? This was a textbook long. I missed it because it happened overnight. I would look at the pound. I would look at the silver, the gold, crude, etc. Canadian dollar, just like I told you now. So I don't have to settle with something that is not moving properly. Okay, some people will panic and exit immediately after the first target, but with time I can train you. Once seeing is believing, right? So once you come into the trial, hopefully you'll like it, you'll enjoy it, and I will show you how to get to the trials. So some of you will say, I don't like to trade currencies. Why not? Why not? Once you see the idea behind having a basket of instruments that you can trade, why not? Some of you will say, my margins will not allow me to hold a trade on gold, for example, for 2 days or overnight. So why don't you start trading gold in the Forex market too? It doesn't have a margin. It does not increase the margin. And you're allowed to trade Forex gold, which is, if I show you, I trade it. It's right here. Gold FX, which is XAU USD, right here. Right? You can do that, and it doesn't need a lot of margin, and does not increase margin. It does not roll over. It does not expire. Right? So some of you will say, okay, why do you trade, for example, the crude short and the announcement suggested otherwise? It's not how I feel about it, folks. It's about how I see it and what I see. It has nothing to do with the feeling. The feelings are pre-programmed by whatever you hear or whatever you listen to. The reality is what you see right in front of you. It has nothing to do with how you feel about it. The reality is, that's why the market will do things that you train to do opposite, and you don't understand why this is happening, right? Once you get volume profile in your arsenal, you will understand it, right? I have some examples, but look at this. When you are trading, and this is John George, he's a member. You will see him in the trial if you join us. He is an elite member. When you are trading and watching your normal charts with lagging indicators, often markets will reach a point where it does something you just cannot understand or predict. However, he says using volume profile the way Simon does gives you a window to otherwise hidden currents that drive all markets. Quit reaching to the market, or reacting to the market, because I always say do not react to the market, be a proactive trader. Okay, get the edge by using volume profile. Hopefully I'll have enough time to cover whatever I need to cover, but this is the website. Okay, please learn. Go to the website at thetraderinstitute.com. There is a handout that Anna will post, but probably me post it too, and the question in the chat box, or question, yeah, chat box. Where's the chat box? View chat box here. I posted a link to the chat box. Hopefully you guys will get it, right? And I will also get the questions as well. Now, on the website, if you go to About Us, please pay attention. If you go to About Us, go to Education. There's important videos. If you attended this seminar or webinar, don't worry about the first video. But video number 2, it explains exactly what indicators we use. You will like it, you will enjoy it. Video number 3 is adult ADD and how it manifests itself in trading. This will be recorded, right, Anna, and it will be distributed to you guys. If not, I have a similar one here on the. If you go to the website, go to education. First video is similar to this one, right? But video number 3, I always say, if you're not getting married today, you really have to watch it. And I mean it, folks. It's free. It's done by a doctor, a specialist back in 2014 for us. It's still valid. If you have time, you have to make time for this today. And I mean it. All right. Furthermore, on the website, you will notice I have a YouTube channel, a lot of videos about how we trade, right? And basically, I explained what students would get initially when they join us. It's a full membership. You will get the education. You will get the live trade room. You will get all these channels to enter. For example, I have this channel right here. Welcome to TTI. It's open for everybody. It's open. You go to the website and you can subscribe. This is open. It's not something I can control. You can join it and get into it. The way to get it is from the website initial page, I think. Where is the free trial? Free trade updates. Yeah, here. Right? So go to free trade updates right here and join the Telegram channel. You have to have Telegram on your phone. But here's the thing. If you are interested in a free trial, no obligation, by the way, go to contact us. You can contact free trial inquiry, sales, trade questions, email me directly, and general information or trials, email jr@info@thetraderinstitute.com. Pretty straightforward. Thank you, folks. I am open for questions. Anybody has questions, I'm here. We have another 5 minutes to cover. Linda, yeah, you can watch the. We have it on the website if you want it. I had to be a little bit quick, but because I am also I had the information is a lot. I cannot cover it just with 45 minutes. Therefore, going to the website is important. Please. Why Telegram versus Twitter? I don't know. I never used Twitter. I don't have Twitter account. Telegram, I think because I can specify channels. Look, I don't know if Twitter can do that. I have a channel for indices. This is for Nasdaq, Russell, Dow. I have one for currencies. This is all the currencies, whether they are in the forex market or the futures market. I call them here, such as today's call on Canadian dollar. I call them both, the Canadian on future side and USD CAD on the Canadians on the forex side. Metals, I have a channel for gold and silver. One for us to talk, team, me and my helpers, and I have bitcoins. And you can also add me, and you could private chat with me here. I have a lot of people, students, non-students, private chat with me. You know, I'm available if I have the time. Thanks for the question. Yeah, I look at gold, and these trade calls, folks, can go. My Telegram, if you go to the website, go to the traderinstitute.com, right? Sorry, the first page here, free updates at the bottom. Here, I'll give you the link, send to all. I'll give you the link here as well. I have a PDF handout you can use. Okay. How long is the trial? 2 weeks. You can stay with us 2 weeks, but you have to request a trial from either info or sales. If you go to the about us or contact page, either sales or info. Okay. Any more questions? Yeah, I have to follow up with the members because we have a Canadian dollar trade CAD futures short from the line, and we have a USD CAD long because they go opposite from this area. So thanks everybody. What is the cost? We have that also on the website. We have different levels of entries, but again, every month we have a different offers. We can also offer payment plans, but that will be discussed. I don't sell anything. At this time, we don't sell anything. You have to join the trial and then talk to the sales manager. But the prices are initially on the website. But these are not the actual, like we always give discounts depending on the month and depending on your situation too. If you go to the website, see membership, it's right here. All right. So the idea is, folks, behind this was find a way to benefit from my trade calls. There's 1,000 ticks at least is given to you in trade calls, right? It's your job, once you join us, if you pay for the membership, make it work because we are here to help. I'm always available. I work extra hours because I love my charts. I love trading. I have 6 different screens, 2 different computers. One of them is mostly CFDs and Forex. The other one is futures. So I always give signals. I always follow up because I'm always in 1 or 2 trades. Thank you, everybody. Thank you, Anna. Appreciate it. All the best.